Okay, can I start? Okay, guys. Good morning to all of you. So today, let's try to discuss the pre-mock and finish it off. Before I start, I have bad news. Certain answers in the marking scheme for pre-mock are not exactly correct. So for those, we need to amend the answers. I don't know, but this is usually it's not ACCA. Usually answers are correct with them. But there was one paper sometimes back, also a couple of sessions back. There were a lot of errors, not just in tax one. In that time, tax was better last time. FM and all had some serious mistakes in the answer key scheme that they have given. This time, tax one also, I have seen some issues. Plus, certain questions you might seem familiar. Again, I don't know why they did that. Some of the questions they have just copied from previous papers. So don't rely too much on this mock. That's why I'm saying, because some questions you have already done, exact same question, just the year is changed. Certain questions are straight away from previous past papers. So don't take this as a benchmark or anything. Just we need to do this to complete the program. For that purpose, we will do this one, but don't rely too much on the pre-mock. As I always say, pre-mocks are just a small guidance, but papers and mocks would be the main thing that we need to focus, which we have already done. So this one just keep as a small guidance. Don't be very adamant towards the pre-mock only. Okay. So before we start itself, I'm communicating this because yesterday night when I was trying to redo, I also figured out there were certain mistakes in the answers that they have given. Okay. Right. So everyone log into the pre-mock. Okay, so let's start with section A straight away. First one, can you give a try? Everyone, please give a try for first question. When you are doing this paper, please trust your answer. Good morning. Quickly log into the pre-mock. Good morning, Ishak. Quickly log into the pre-mock. Where is your buddy? Just start. Quickly log in. Study. I got one answer, 5,994. Saurabh, can you share your working as well? Maybe in WhatsApp. You can do what? 5936. Okay. See, okay. 5813. 5930. Okay. How did you get the answer? How, how? 5. Shall we try? Okay, let's redo this one from the beginning. No, that's why I take it out. What is the property income? Give me the figures, please. 17,250. Okay, savings income. Dividend. We'll have total line as well. Right now, what you should do? Personal allowance 12,570. Then we derive at the taxable income, right? Up to now, everyone agree with the answer? Right. Any questions up to now? Okay. Then this whole amount will be taken under the non-savings at 20%. This also we all agree. No issues. Right. Then savings. Do we have the starting rate coming into the picture? Yes. Why? Because the taxable non-savings is less than £5,000. Finally, it's okay. Minus this. This will be at, okay, the nil rate band will be how much? 500. Basic rate or higher rate? Higher rate, right? 38,680. No? Hmm? Right? We are going by this one only, no? From this one, you can decide whether he's a basic rate or a higher rate taxpayer, right? Okay. 37,700 is a basic rate band. We have to, otherwise we cannot split the buckets. No? We split the buckets based on the total taxable income, correct? So total taxable income is above 37,700, which is the basic rate band. Agree? 37,700 is the basic rate band. So this is higher than the basic rate band. So this fellow becomes a higher rate taxpayer. If he's a higher rate taxpayer, then nil rate band will be how much? 500. This is again at, okay. Then this is your savings income. Out of that, these two you have take you have taken out these two. Only 17,180 is remaining. Agree? No, I just took this figure. No? No. You can take this one. If the total of these two is exceeding basic rate band, then 37,700 minus everything above. Yeah, this is not exceeding. No. So what I am doing is from the savings income, whatever I have took above, I take it out. Only the remaining part we need to consider that. Agree? So then this will be at 20%. We all agree with that? Okay. All okay? Up to now? Right. Then dividend income. Nil rate band, is it applicable? Yes. Irrespective of your level of income, always £1,000 would be there. So I'm granting 1,000. Then basic rate band, my limit is 37,700. But above I have used this plus this plus this. This entire thing I have already utilized, right? Agree? Then the remainder would be 14,020. That also we all agree. This will be at what rate? 8.75. Good. Then the remainder. Total same bands. Only the rate is changing. Always, if it is exceed only, doesn't matter whether it is savings or whatever. The reason is otherwise you can straight away take from the savings itself. You don't need to go for the total. Agree? So 16,000 is the total dividend income. Out of that, 1,000 we took for the nil rate band and 14,020 we took for the basic rate band. And then only remaining is 980. This will be at the higher rate band. So how much is the higher rate band? 33.75. Good morning, Mr. Fadil. Right. Then how much will be the income tax? 5,930. Are we okay with that? Sorry. But you have to get the exact answer. I told you, you were not there. Starting with it's not my fault. Have to come on 8:30. I told that at that time. So are we okay with question one? Any questions on the first question? We are okay? Can we move on to the next one? So this one is like a revision of your chapter one fully. Not one actually, two. If you give pensions out, the entire chapter two is here in one question. Right? Okay, then I'm taking this one and moving on to the next question. Mr. Ita, try this one. Yeah. First question. Okay. No, guys, like I told in the beginning, this paper, certain questions we had some errors in the marking scheme. And certain questions they have straight away taken from some past papers. Some question you might feel that you have done before because you have done those before. So, and compared to the normal paper that you get in the exam, this is calculation heavy. Very less focus on tax admin and theoretical areas in this particular paper. But in the exam, it will be other way around. There would be a balance between theory and calculation. This one is purely focusing on calculations. Around 70 to 80% of the paper is around calculations. Whereas in the real, you will get a proper balance between these two to save the time, theory and calculations. But this one, yes, the mixture is slightly out, but we have to do the paper. This is a good one for revision for sure. Okay, question two, guys, quickly give it a try. Fadil, come on. Get the ASC guys, try to write and do the answer because the exam is coming. 3,420 from Soumya. How about you? 760, the last one. HP. Shall we discuss? Okay, as usual, I read the requirement first. What are the total taxable benefits for Peter in respect of the laptop? So that means I'm pretty sure he is an employee and employer might have given something. Peter is employed by Buffalo PLC, okay, a good company. He was provided with a laptop for private use on 6th October 2022. Be careful about the dates. Huh? This is in 2022. The market value of the laptop, when first provided to an employee to private use, was 3,800. So when it was given to Peter, the value was 3,800. And the laptop had a market value of 2,200 when first provided. Okay, that is confusing. We'll stick to 3,800. Okay. So Peter is the employee. That's why I said that part is a bit confusing. Let's stick to 3,800 part. Because that is, so what is a finance access? What is the sentence in the Finance Act? You have to calculate from the market value when you first gave to an employee. Finance Act doesn't say any specific employee story, right? When given to employee, that's what the Finance Act says. That's what the TUT also has. Same wording is there for 3,800. So let's stick to the same wording. Whenever there's a confusion, no, it's from 6th October 2022. Okay. Again, stick to what we learned. Don't experiment. What we learned. All right. So stick to that basic. Because like I always say, this paper and even in your exam that can happen. Wordings can be confusing. There can be unnecessary information and there can be unnecessary confusing jargons also. That's a common thing in taxation. I don't know why they do that in tax only, but that happens in tax. So the easiest way is stick to the exact wordings we did. So the exact wording we did was when it was first given to an employee. That's what we decided to discuss, no? So the 3,800 would be the figure that we need to consider it. That we agree. So our employee is Peter in this case. That is also agreed. So if Peter is the employee, pick the date they have given to Peter. Clear? So 3,800 considered from 6th October 2022. We are okay? Done? Right. Then Buffalo gave the laptop to Peter on 5th April 2024 when the market value of 1,200 pounds. So we have to assume in the way that they have worded, it has been gifted. Since they say given to Peter. Correct? So then this is an asset given for private use first. Thereafter, the same thing is gifted. That is what we have to assume. Agree? So then there will be two benefits for the current year. Asset in use and the transfer value. Both would be there. Agree? So two components would be there for the current year. That is also agreed. Right. Then let's quickly do the calculation. So whenever you comes to this whole gift question, better to calculate the value in use year-wise, tax year-wise. Because current year we have to edit. No? So rather than taking a full amount, better to go by the tax year basis. Otherwise, current year you will have to anyway separately calculate to get the full benefit. Rather than doing that, If I calculate for each tax year separately, that will save me time. So 2022, 2023, it's given on October. No? So October, November, December, Jan, Feb, March, 6 months. Agree? So that's what I have done here. 3,800 into 20%, 12 divided by 12 into 6. Agree? Then current year, full year it is given. So I straight away take the full year one. That is also okay. Clear? Then the total would be 1,140. That is the taxed value so far. The values that should have been taxed so far. Market value when first gave 1 the value that should have been taxed up to now. 20% for 6 months in 2020. Yeah. Then 3,800 was the market value at that time. So the gap is unused or untaxed value, right? Which is 2,660. At the time of gifting the asset, the market value was 1,200. Out of these two, we have to take what? The higher figure, which is 2,660. We already calculated the value for the current year. That is 760. So 2,260 plus 760 would be the overall benefit for the current year. Agree? 3,800 into 20%. Sorry? That is only 6 months, no? So the total benefit would be 2,660 plus 760, which is 3,420. Yeah, because 2022, 2023 one would have already taxed in that particular year, right? Now we are calculating the taxable amount for the current year, 2023, 2024. We are okay? Sorry? That into 20% into that is okay for 2022, 2023. We are calculating to 2023, 2024. No? Then for that period, full year, the asset has been used by Peter, right? Only on the last date, they are transferring it to Peter. For the current year, no, right? We are calculating for the current year. If you tax for the current year, you should have taxed the transfer value as well. Current year, you have two components, no? Transfer value is there. Value in use is also there because you are transferring at the last date of the tax year. Agree? So both are within the current year. No? If you have tax, you should have taxed both. So both are not tax means full amount we need to calculate. Agree? Right. So the answer would be B, 3,420. All agree with that? Okay. Then I'm moving on to question number 3. Can you quickly give a try for this one as well? 4,918.6. Okay. Guys, this is not a complicated question. Why are we getting different answers? Shall we discuss? Five thousand 19 is there, 5,049 is there, okay? 5,159, 5,049. 5,048. This is 48, okay. Rufina? 5,048. Chance answer. Okay. Isha? Let's see. Isha? 538. 5, 5383. Okay. Wow. Almost exactly 1 hour late. As usual. Okay, guys, let's quickly look at this. You log into the pre-mock. Yep. We are in question 3 now. Mary is an employee of Counter Limited and is paid an annual salary of £75,000. She makes contributions of 5,000 into company's occupational pension scheme each year. In the tax year 2023-2024, she drove 14,000 business miles in her own car, for which she was paid 50 pennies per mile by Counter Limited. How much employee class 1 NIC Mary required to pay for the tax year 2023-2024? That is all we need to check. Okay, so we have 3 benefits here, no? Rather 3 things. Salary. Is it coming for employee class 1 contribution? Yes. Pension contribution. Can we deduct that? We cannot. Because NIC, we did not discuss about any deductions. For employment income, yes. Income tax purpose, we can deduct. But not for NIC purpose. That is also okay. Marriage allowance. Obviously, I can see the amount is higher here. So, can we consider that? Yes, the excess we need to tax. Agree? All good? Right. So, 75,000 I can take. Occupational pension 0. Okay, wait. 700 is wrong. I can see your face. So, this is what they have done. Yes, simply 45. But technically, it should be other way around. Since it's 14,000 miles, we will have to split it. 10,000 separately, 4,000 separately. Isn't it? That is the rate they have given, right? So if the rate they have given is like that, then we have to split. We are okay? So what do we need to do then? 10,000 into 0.05, right? 0.5 minus 0.45. Agree? This plus 4,000 into 0.25. All agree? Everyone agree for this? Right. Then 76,500 would be the answer. Out of that, 12,570 will be at 0%. The gap between 5270 and 12,570, that means 37,700 will be at 12%. The balance 26,230 will be at 2%. So the final would be 5,049. Agree? PA is for income tax purpose only. This is a nice. You're good? So the correct answer would be 5,049. All agree with that? Right. So this also we will change 549. The market scheme answer was, like I said, 5,033, but at the beginning also I said there are certain discrepancies in this particular paper. We are okay? Then can I move on to the next question then? We have to consider the salary also like we did, Basil, because that is also a cash benefit. Question number 4. Can you quickly try? Great, I got one answer. Guys, this is a straightforward one. You don't need 2 minutes even to figure out the answer for this. Just the reading time is enough. Yes, correct. The answer is 0. What they ask is, what is the taxable benefit for Judy? Judy provided with an accommodation by her employer, which employer purchased 35 years ago at a cost of 74,500. Cost 74,500 means, can there be an expensive accommodation? Less than 75, so expensive accommodation is out. Agree? Annual value is 2,600. Market value, we don't care now. Expensive accommodation is not there. So annual value is 2,600. So the basic charge is there, 5. But he is paying 250 per month. 250 multiplied by 12 is how much? 3,000? 3,000, which is above 2,600. So that means more than the benefit she gets, she has done a payment. Then can there be a taxable benefit? No, right? Then the amount should be what? 0. Yeah, correct. Yeah. So in this case, it goes, the taxable value is less than the actual amount that she has paid. Therefore, no taxable benefit. Value should be 0. Straightforward. Are we good? So do we need 4 minutes to do a question like this? ඒක තියෙනවද කියලා ඉතින් පොඩ්ඩක් check කරලා බලන්න. Moving on to the next one. Can you try this one as well? Then we have Nidishan as Asjad also joined. Exactly 97,000. Okay. Anyone else who has completed? Shall we discuss? Yeah. Okay. So let's start discussing. So with this one, I am going to touch a small concept. You guys know something called super reduction, right? What is super reduction? We gave up to 31st March 2023. What did we do? We had two. One for main pool, one for special rate pool. So main pool, what we did, 130% we gave. For special rate pool, we gave 50%. But this is after AIA. There was a compulsory ruling, you have to finish off AIA if you are going for 50% special rate pool super reduction. Agree? Clear? This was given during this period. The start was in 2021. So from 2021 to 2023, we gave this benefit because of the pandemic, because we wanted people to keep on investing without shutting down the businesses. We wanted them to keep on investing so that the industry runs. Agree? But now things are settled, right? This was a temporary benefit given to overcome. No? Agree? Now, if you are disposing one of these assets, we should recover what we gave, isn't it? As HMRC. Otherwise, it is unfair for the government, right? They gave you the benefit when you were struggling. Now, when the things are back to normal, if you are disposing an asset where you got this additional benefit, now we preserve the right to get something back, right? Agree? Because we gave the full benefit for you when you were struggling, isn't it? So for that, there can be three situations. Super reduction is done. One is the main pool. Second one, under special rate pool, there can be two scenarios. First one, no AIA, only 50%. Second one, AIA and 50%. Both these two scenarios can happen. So there are three possibilities. 1, 2, 3. That is also okay. Isha? Abdullah? Right. So for situation 1, what you did? You deducted 130 under CA. Agree? That is what you did, no? Correct? Yeah. I mean, you added. You gave 130% as CA. And so this had 2. 1 plus 2 CA. And nothing came for pool, right? Isn't it? Now, when you are disposing, the general rule is what? What you are doing as a general rule? You take the cost, disposal proceeds, whichever lower you deduct from the pool. Why the asset is there in the pool? Now, is this asset there in the pool? Then can I allow you to do the same procedure here? No, right? Because pool doesn't contain this asset itself. So I cannot allow you to deduct from the pool then. Isn't it? Then my pool will be understated if I allow you to deduct from the pool. Where is this entire thing included now? It is in the capital allowance. You could have claimed that year. Therefore, whatever the disposal proceeds you get, we minus it from CA here. That's all you need to do on the main pool. Clear? Yeah, okay? CA. Because that is there in the CA only now, right? Asset is fully in CA. Agree? Disposal part will come into the picture. We are good? All okay for situation 1? And are we okay? Now moving on to situation 2. 1 is tested means 2 and 3 also can be tested. No? Agree? So in situation 2, what happened? This is about special rate pool. 50% we gave as CA. 50% we took to the pool. Correct? Then now we need to do same procedure. This we need to split to 2. 50% against CA we are deducting. 50% here. The balance 50% against the special rate food. Simple as that. Okay. 5,000 will be deducted from the CA. 5,000 will be deducted from the pool. Because half of the asset is in the pool, half of the asset is in the CA. Agree? That is also okay. Imad? Rufina? Right. Okay. 50% will be deducted from CA. This part, yes. CA, pool. Yeah, now both are deducting. Adding part will not be there for you. They would have already done that. Your concern is the deduction. Are we good? All okay? Third scenario is a little complex. Third scenario, what has happened is you have claimed AIA and 50% benefit. That means 3 things would have happened. AIA would have claimed from the balance 50% in the pool, 50% in the CA. Correct? This is what would have happened. Agree? So let's take few numerical stuff for this one. Asset value, let's say 1.5 million. Nothing else is there. Then what will you do? Yeah. What would we do now? You will do this, right? So 500,000 will remain. Out of this, 250 would have been taken as CA. Another 250 would have been taken to the pool. This is what you would have done. That is also agreed. We are good. Right. Now let's say your disposal proceeds is 200,000. What should you do now? Take the proportion. Your total asset value was 1.5 million. Will they say that? Yeah, they have to give, otherwise you can't do the calculation. Then out of that, only 500 you got the advantage of the what do you call the super reduction, right? 1 million went against the AIA. So this 200,000 you have to split between this. Divide by 1.5 million, multiply by 500,000 to figure out how much is exposed to the super reduction. Clear? A simple proportion. So what is the answer here? 200,000 divided by 1.5 million into 500,000. 6,000. This one? This one? So this now you need to split to 2. 50% of this is how much? 33,333. This you deduct from CA. This you deduct from pool. Simple as that. Are we okay? Because main pool, we didn't have a problem with AI, we anyway gave you 130% benefit, which was dominant than AIA, right? Problem was in special rate pool, the super reduction was only 50%. So we gave the prominence to AIA because that was 100% benefit. Agree? Clear? All 3 scenarios, how to tackle, are we okay now? 100% clear? Good? Right. Then let's come to this one. During the year ended 31st March 2024, Blue Cheese Limited purchased a second-handed machine for 100,000 pounds. The old machine was disposed of May 2023 for 10,000 pounds. The old machine originally costed 90,000 and super deduction was claimed when it was purchased. On 1st April 2023, Blue Cheese Limited has a tax written down value brought forward in main pool 43,000. So they say, what do you call, super deduction is claimed. No? They are not saying whether it is 130% one or 50% one. So how can we identify which one? It should be main pool, right? Because we are talking about a machine and the value is less than 100,000 pounds. Then it should be a main pool asset, right? There is no reason a machine to get classified under the special rate pool unless value is above 100,000 and the useful lifetime is above 25 years. This value itself is less than 100,000. That means clearly this is a main pool one. Then the super deduction you would have claimed is 130% one, not the 50%. Agree? Shan? Having that in mind, let's move on to the Excel. So I do my normal calculation. Main pool, I took the opening balance. There was a 43,000 opening balance. There was a new machine, new or rather old, we say old machine. Which was purchased at 100,000. For that, you can claim AIA, right? For AIA, there is no condition that it should be brand new or whatever. No? So I claimed AIA and took it for the CA column. Then the disposal, we cannot adjust for the pool because this is a 130% super deduction asset. So we discussed, we should directly deduct it from the capital allowances column. So 10,000 I deducted from the capital allowances column. But our calculation is not over because we have the opening balance still. For that, we have to calculate written down allowance. So WDA will be at 18% since this is the main pool. 43,000 into 18%, which is 7,740. Then I get the total of my capital allowances column, which is 97,740. Are we good? Any questions? All okay? Yeah, DP is disposal proceeds. That is the amount got exposed to super reduction. Okay. Yeah. And okay with this one? Can I move on to the Excel then? Which value? Total the capital allowances column. Yeah, just the simple sum. 10,000 deducted, 100,000 and 7,740 added. So they will say they will say what? The cost of AI. No, they might tell the full amount. They might tell the full amount. Well, AI is anyway 1 million. AI can be utilized for others. Okay. They will give you an indication how AI has been used. Nothing is given, then assume full AI is used for this particular asset. Are you okay? Right. So we are good up to now. Isha, Excel is okay. Can I move on to the next question then? Paper is not bad, right? Just that too much of calculations. Agree? It's just the beginning, guys. We are still on the sixth question. Can you try this one quickly? Boys? Do you think we can finish at 12:30? No, ne? Okay, you guys go ahead with this. 14,490. 494. Okay. Switch off the fan. Only your one or the both? Too cold. Ishak, of course, yes. Too small. Isn't it, Ishak? Right. Rufina, what is your answer? Huh? Imad? 13,680. Okay. Uma? 14,490. Online guys, I got only one answer from you all. Please share the answer. Ishak? 13,680. Fadil, you said an answer. 14,494. Okay. Abdullah? 14,494. Midu? Not sure. Okay. Online, I got another answer. 14,494. Yes, Shan? Yes? Shan's answer is? What is your answer? Okay. Right. As usual, start with the requirement. What is the corporation tax payable by Dove Limited for the period ended 31st March 2024? Dove Limited has one associated company and has the following results for the 9-month period ended 31st March 2024. Trading profits 40,000, chargeable gains 20,000, dividends 12,000. Correct? So dividends of 12,000 was received from a company in which Dove Limited owns 52% shares. So now what should happen? No, no. Okay. Okay. First of all, let's take the profit TTP. So how much is the trading profit? 40, right? This is 40. Then you have a chargeable gain. No? How much is that? Then you have a dividend. Are we taking that? Why? Below dividend? Non-group dividend we take here. Are we calculating augmented profit now? Okay.
Say in chance they gave percentage was 35. No, less than 50. Then we take no.
That's what I'm asking.
Yeah.
No. Either way, no, guys, we are calculating TTP here, no, not the augmented profit. So for TTP, any dividend is exempted. So no dividend is taken. Up to now, we are okay. So this is one figure we need. So I box that.
So they say what is the augmented profit?
I'm coming to that. We need the augmented profit also technically. For that, we need to add non-group dividend. So we have a 12,000 dividend. Is it a group dividend or a non-group dividend?
Group dividend.
Group dividend. Sure. That is what I was about to ask. I don't know. You guys tell me.
The non
Correct. only to go for group relief group or chargeable gain group, we need this whole 75% story. In generic terms, if you have the controlling power, that itself creates a group. So here you are owning 52%, right? You have 52% ownership means obviously you have the controlling power. Agree? Then that dividend is going to be a group dividend, not a, sorry, non-group dividend. If so, can I take that? No. Then my augmented profit will also be 60,000. That also we agree. What are the other figures we need? We need to figure out the upper limit and the lower limit.
The 9 months. 9.
First, let's see. Now lower limit. I'll use a short form. That'll be easy. Yes, Shan. So lower limit, how are we going to calculate? You don't have to. Why? Agree. So lower limit, we don't have to consider at all because even if you consider the entire 50,000, this is above that. So you are exceeding lower limit anyway. Upper limit, we have to apportion it. So upper limit is 250, no? Agree. Now how are we going to apportion it? Yes. Yeah, they are saying you have a subsidiary, right? So that means this will be anyway divided by 2. Apart from that, the period is 9 months. That means this you need to divide by 12 and multiply by 9 as well. Correct? Then what is your upper limit? 93,750, right? Correct? Correct. Yes. Up. Sir, are we okay? What should we do next? Tax calculation. So for that, you have 2 options. You don't have an ungrouped dividend, no. Either you can go for effective marginal rate method, or else you can go for the percentage. Either way you can do. Correct? So
But they are not asking for marginal.
Section means so whatever easy for you, you can do them. They are not checking workings anyway, you know. They only get the final answer, no? So whatever easy for you, you can do that. Correct? So I am going to use a marginal rate method first. So 19% into, for that I need the lower limit as well. So let's calculate the lower limit also. 50,000 divided by 2 divided by 12 into 9. How much? 18,750. Correct? So then I need 18,750 into 19% first. How much is that? Sorry? 356. 3. Then how much is the balance? The gap between these two. No, sorry. The gap between this and 60. 41. It's into 26.5%. That's what we are doing. That's only enough. That's what we are doing now. Total This is the effective marginal rate method. So let's try the other method as well. That's the effective marginal rate. Now, let's try the method number 2 as well. So in that, what you need to do, you have to use the main rate. So 60,000 into your main rate of 25%. That is how much? 50,000. Exactly 50,000. Right. Then you need to go for your marginal relief. How do you do your marginal relief? Augmented profit 93,750 minus 60,000.
So maybe into 3 over 25. 3 over 1.
This is it, right? So what's the answer here? Then what's the final answer you are getting? So either way you are getting the same answer then? Here not necessary because your augmented profit and TTP both are same, right? Yes. Next part will be your TTP divided by the augmented profit. That is going to be 1 in this case. 60,000 divided by 60,000. Correct? Agree? Isha? You don't need the lower limit if you are using second method, the formula method. You need the lower limit only if you go for this first method, marginal relief method, effective marginal relief method. Are we good? This one you are not using lower limit. Where have you used the lower limit? 60,000 is not the lower limit, that's a profit. Correct? If you are using the marginal relief method, the formula method, you don't need the lower limit. If you are using the first method, like the effective marginal rate method, then only you need the lower limit. Are we okay with this question now? Okay. Unless they specify this method to be done, you can go for either way. Given there is no non-group dividend. We're good? All okay? Altaf, are we okay? Right. Can I move on to the next question then? Okay, give a try. A simple one. So why can't you do it? What? Do you know what is your question? Raise the question. If you don't know what is the question, then it's a problem. That you tell me.
So, our
2170, okay? Yeah, just quickly do. This is also straightforward, but
so you have already given the input by equal, so you don't have to do any.
okay. Let's see, once the others are done, this answer Imad can explain. Next one for Fadil. After that, Shan.
Isha?
Next two. If he did do the short note as well, so two. Wait. Rufina, da? Isha? What is the answer? Okay. Abdullah? 2170. Midhu? Uma? Okay, let's make a small change. Ishan, explain how you got 2170. Why not 5000? Okay. So fully we are ignoring. Even a percentage we are not allowing. No. Why? Sorry? That's what you know. Okay. Okay, let's walk through the question starting from requirement. What is the amount of input VAT recoverable by Sheila in the quarter ended 31st March 2024 in respect of the entertaining office equipment and car? Is exempted. Wow. For VAT. Did we discuss something like that? Car is exempted for VAT? No, car is exempted. Have we discussed something like that for VAT?
Last class, yes.
No, today is the normal class. It's Sunday morning, the normal class. So, car exemption was for CGD, not for VAT. Correct? But I agree with what he said. The way he reacted itself told me the story that he's guessing. So, but with a guess, what he said is correct. For that purpose, if even a 1% personal usage is there, we don't allow VAT. Correct? Output VAT, when you're disposing only, it will come into the picture. You have to charge.
Input rate is 6.
Yeah. Yeah, good. So we have three things here. Entertaining overseas customers. Is it allowed? Sure. Then what is disallowed when it comes to entertaining? Local customers. Only local customers. Any kind of a supplier and local customers are exempted. Only allowed one is overseas customers and employees. Agree? So for this 620, the employee doesn't matter whether UK or USA or whatever. Employee is allowed. Yeah, okay. Yep. So now you have to assume you are a UK fellow. So then purchase of office equipment, obviously you can claim. We already discussed about the car, we cannot claim, and we discussed why we cannot claim as well. So the answer would be the total of 620 plus 1550, which is 2170. We are okay? Clear? All good? Yeah. Give a try for this one as well. A bit of an interesting one. Give a try. By this time, you would have started the following well. Right. Yes. Yes, Shan. Those days when someone tell me Ennada, I used to give an answer. I will ඉන්නේ දැන් නැත්තම් කොහොමද කතා කරන්නේ? Pardon? 9,360. Okay, online also I got 10,440, 9,360 and 10,440. Okay. Isha, 9,360. Shan, no sir, anyway, so is here. 10,440. Okay.
Same time, related, so altogether it is 1,000 into 12%.
Okay. Midusha, 6,480. Okay. Right. So they are asking about what? So let's read the question. What amount of VAT is payable by Destiny to HMRC in respect of the year ended 31st March 2024? Destiny is registered for VAT and calculates her VAT liability based on the flat rate scheme. The relevant flat rate percentage for Destiny's business is 12%. For the year ended 31st March 2024, Destiny's sales exclusive of VAT were 45,000 for standard rated, 25,000 for zero rated, 8,000 for exempted. So we need to calculate how much she's paying. So she's going for flat rate now according to what they're saying. So how do we calculate VAT for flat rate? So that means 45 plus 25 plus 8. Okay. One part is missing. We calculate for VAT inclusive amount, not the VAT exclusive figure. Isn't it? We calculate based on the VAT inclusive amount. Agree? So that means we are going for VAT inclusive means, first of all, we have to add the VAT figures to these numbers for them. So 45,000 will be taxed at which rate? 20%. So if I take 120, then I take the VAT inclusive figure, right? How much? 54. Then zero rated one tax rate? Same. So zero rated figure is how much? 25. Exempted one tax at which rate? Same. 8,000. Then the total. How much is a flat rate figure? 12%.
So we don't care that it's exempted or.
Flat rate? No. Your entire VAT inclusive supply into the flat rate they have given. So zero rated VAT inclusive one is how much? Zero, right? VAT amount is zero means your supply is equal to the VAT inclusive amount, right? Correct? Yes or not clear? Sure. Right. So how much is the total here now? 10, 4, 4. Are we okay there? Any questions on this one? All good? 100% sure? Isha? Sure? Guys, if not clear, tell me. Abdullah? Imad? Tani, is anyway okay? Okay, I got a request to repeat the rule, so I'm explaining once more. If we are going for the flat rate scheme, the calculation method is your total VAT inclusive supply into whatever the flat rate. The flat rate will be given to you in the exam. In this one also they have given. But the turnover figures they have given or the supply figures they have given here is VAT exclusive values. So I need to convert that into the VAT inclusive ones. So standard rated ones, I have to multiply by 120% if I want to convert it into VAT inclusive. Agree? Zero rated one will be as it is because VAT figure is zero. If VAT is zero, supply will be equal to the VAT inclusive figure. Exempted, again the same value. Why? Exempted means again there is no VAT charged. Correct? So I took the total after that. Then they have given the flat rate, which is 12%. I just multiplied by that. Are we good? Basil, are we okay? Great. Sorry? In the normal VAT schemes, we can consider that. This is a specialized VAT scheme. No? We are not giving the input VAT to you. No. Here we are not considering input at all. Under normal conditions, we have the exemption, standard rated, zero rated, all those stories are under the normal VAT. Are we good? Clear? All okay? Can I move on to the next question then? Right. Okay. Pick the answer.
This, this.
This one I have missed. Okay. Try this one. It's again an answer. There were some nice questions in this paper. Okay, I already got two answers. Right? Okay, I don't know the time until the paper is over, we will continue. Okay, you guys are taking in trouble though. I have to reach into the low class.
The 9310.
9310. Okay.
You go. That is 10 power 6.
Wait, my dear. You are still at the degree. This is just section game. This is not that good. Check the other. Not that good. Okay, I'm getting answers from online. Food chains are also having Christmas this time, no? Food chains are also having Christmas this time, no? So many offers are coming from this. It's bad for my card. Because you guys, you will get to know in future how wives are. You don't know, right? You're not married? Shan, maybe. Yeah. We cut Shan. Apart from Shan, I'm speaking about. December is a very bad month, no holidays at all. Done? So when discounts are there, I get the call. Today there's a discount X amount at that particular place. I'm like, fine, you can go, but do you really want that? No, but the discount is there, no. So let's give a try. And I, okay, fine. It's 25% discount, but 75% you have to pay. If you want, it's fine. If you don't want, still you have to pay 75%. But that argument never wins. So, Ashan, just a upfront warning. Fadil, it's not a problem. No, no, happy life in the sense, Fadil has strategized that. He has a cool look. So, one side he spends, from the other side he collects. No, no, he's managing risk. He's a good finance manager. He's managing risk. Isn't it, Fadil? I don't know. This fellow told me. It's truth. Isn't it, Cha? Sometimes when he's at home, he will say he's in a funeral. That's a different story. But generally, he tells the truth. Apart from those things. Okay, so let's discuss this one then. Question is, what is Rose's capital gains tax payable for the tax year 2023-2024? Let's see the scenario. Richard acquired a holiday villa for £125,000 on 1st May 2013. She gave it to his wife, Rose, on 30th September 2018 when it was worth £100,000. Rose sold the villa for £75,000 on 1st July 2023. The villa was never the couple's main home. Rose had no other capital disposals in the tax year 2023-2024 and has capital losses brought forward £8,000. Her taxable income for the tax year 2023-2024 is £30,000. So how do we calculate?
Gain minus.
How do we calculate the gain first of all then?
Cost minus sales.
Sales percentage is how?
5,000 minus 1,000.
Great. So here what happens is, Mr. Richard, right? The fellow's name?
Yeah, it's-
So Richard transfers to, what's the lady's name? Rose. Then they should have made this Jack. Okay. So anyway, So if you transfer inter-spouse, then this will be at no gain, no loss basis, right? If it is no gain, no loss, the cost for Richard would be cost for Rose. So how much was the cost? 125. Sales proceeds is how much? Right. Then disposal proceeds 175, right? Cost is going to be 125. The gain is how much? 50,000. Now what should we do?
Deduct profit.
AEA we need to deal, right? So AEA is how much? Then the balance is 44. Then, great. We have brought forward plus how much?
8,000. 36.
32, right? 36. Then,
No rate and higher.
how? He has 30,000 taxable income, right? So that means
7,700 will be tax plus 10 and balance will be tax.
At 18%.
Because in the residential.
great. So 7,700 will be at 18%. The balance is how much? This into 28%. So how much is here? Sorry?
86.
Here? 7825. 7925. Total?
9,300.
This one. Correct? So I hope everyone is clear what we did here. First, we calculated the chargeable gain. From that, we took out AEA. From that, we took out the brought forward loss. Then we ended up with the taxable gain. But she had only a taxable income of 30,000. That means 7,700 of the basic rate band is unutilized. If so, we can use it for CGT purpose. We took that 7,700 first at the lower rate. This is a residential property. It's a holiday villa. So we taxed it at 18%. And the balance part, we taxed at 28%. So we ended up with a value of 9,310. All okay? Sorry? How much is the taxable income? Right. How much is the basic rate band? How much is unused? No. You're good? Clear? Right. Any questions, guys? Any further questions? Ishaq, all good? Can I go to the next question then? Right. If it is not a residential property, you go for 10 and 20. This is the residential one. So that's why we went for the higher rates, 18 and 28. Are we okay? Good? Right. Okay, I got a request to show the solution. Okay, for this, I'll show the Excel. That will be easy for you all. This is the Excel for that. Question 9. Basil, are we okay? Can I move on to the next question? No, basic rate band would be 7,700 because her taxable income is only 30,000. So the rate is 7,000. I mean, the band is 37,700. So the gap is 7,700. That into 18% would be 1,386. Basil, are we good? Right. Then I am moving to the next question. What is this? You opened the wrong one. Okay, can you guys try this one?
But cost 20 hectares at that time of the proposed meeting. Other 425, so cost is what, so price is 425 plus 25.
And let's say 250 divided by 400 is 300.
They want to get one itself and
Mr. Shan, don't kick the power codes. Fadil, explain the answer. You're Fadil, right?
Yes.
Okay.
Give me a call.
Okay. Okay, what is the formula? No, formula. What is the formula? Good.
Divided by 100 plus is 400. Cost of remaining land minus the 650. It will be 100 following.
Great. If you come to this seat someday, students will have to find a software to slow motion. Yes, Iman?
they raising for
Praising in a sarcastic way. Praising the knowledge, sarcasing the space. Okay, moving on to question. Brandon bought 30 hectares of land on 1st March 2016 for 300,000 pounds. On 1st March 2018, he sold 10 hectares of the land for 150,000 pounds. At this time, the remaining land was worth 250,000 pounds. On 1st Jan 2024, Brandon sold the remaining hectares for 425,600. Identify the chargeable gain and the due date for the CGT payable. So here, he has brought a land, part of it he has sold, the balance part he is selling now. But the problem is, when he initially sold the first component of the land, how much is the cost apportioned to that? We need to figure it out. deduct it from the total cost, and we have to figure out the remaining land's cost. So it's a two-step calculation. Agree? So the total cost is 300,000. That we all agree? Right. So this we have to divide by what? The total market value at the time of initial sale. Correct? Great. So at that time, 150 is the value of the land he sold. The remainder was 250. That means 150 plus 250 is how much? 400. Good. So I divide by 400. And the component that he's selling is valued at 150. Good. How much is the value here?
There is numbers.
Market value is 150, right?
No. At the time, it was not.
Okay, either you can. No, we'll do the long way. We'll do the long way. It's safer. Because if it is 3 steps, you are in trouble if you use a shortcut. So long way, what is the answer? If I take 150, 112, 500. This I need to deduct from this one, right? To figure out the cost of the remaining land. Agree? How much is that? 1875. So this is the cost.
For 28.
Yes. So we know the sales price, right? How much? This one? 600. Now? This is the value of the chargeable gain. You are getting the same figure. If you put 2 here, not the market value. If you put 2, you will get the value this one. The cost of the balance land you will get if you put 250 here. Correct? But that might not work if you have 3 stages of sale. That is why I said don't go for the shortcut, go for the longer way, use 150 here. But you never know what your exam question will be looking like, no? If it is 3 stages, you are in trouble. If you use a shortcut. Correct? So use the long way. We are okay? Ishak, are we good? Sure? 100% sure? Right. Then first one we know 238, 100. Now we need to figure out what is the due date. When has this sold? 31st January 2024, right? You can't pay immediately, no, first of all that. So anyway, 1st of Jan 2024 is out there. Anyway, the answer should be 1st of Jan 2025 in that case, correct? If they wanted to confuse it, they could have given 31st July 2025 or 4 even. Then it could have been a bit confusing, but this one common sense. You can't pay the same day anyway. So only 2 days, then you should go for the other day. It's common sense. Even if you don't know the date, still you can figure out the answer here. If you have the thing called common sense, which I usually don't have. Are you okay? So D would be the answer in this case. Agree? Yeah, same answer. That is the best question for the day. If this is the answer, then whatever the date you give, this should be the answer. I'm just telling you shortcuts in case in exam you find it difficult. Sometimes these shortcuts might help you to figure out the correct answer. Are you okay? So capital gains tax, the deadline is 31st Jan of the following year. Correct? I just told you, even if you forget that in this scenario, based on the dates they have given, still you can use the other method that I told to figure out what is the actual date that they need to pay the tax. Are we good? All okay? Can I move on to the next question then? Great. Okay, your try. You did? Others? Okay, others haven't done that, please. Go ahead. So he's a very time effective fellow. I like that. Can also? Wow. Chan, so explain the answer for this one then. How? Okay, wait. Others are doing. Oh, he found an easy way to escape. Don't worry, I will wait for you. So we have time. We are going to complete the paper today. I reschedule the law class for next week. Not good for me. Yes, after a long time, I had a Saturday free. Now that is also rescheduled for law. Usually my weekends are packed. After a long time, now I'm free. Only the law class is there. You can't even imagine the relaxation. When it's only tax, not a big problem. This is bread and butter. I have been doing this for a long time. So depending on the time you give me, I can figure out a way to finish it off. If 1 month, yes. 5 months, yes. Can be done. Shakla? B. 62,700. As I always say, I want the prize, huh? Not Sri Lankan. Well, why only him? But that is that thing.
Us. Us tax students. Will be scolding the person after he dies.
Me?
His inheritance tax.
Don't worry. Sri Lanka, we don't have inheritance tax. So far, no. I thought you were telling something serious. Can't and serious. Cannot happen, no. You should not scold. You should be happy. Because general public doesn't know how to do inheritance, right? Then who will have to do? Yes, exactly. You should be happy. So think always the positive side, the brighter side of the things, not the other side. So that's how usually I do. So if I miss lunch, I think, okay, at dinner, I will get a good one. So think about the brighter side. Adil is anyway looking at the brighter side, bro. With a good risk management strategy. So the entire syllabus is done now. Questions? Which stage?
Randomly doing everything.
Randomly doing everything. Okay. That's a risky answer, but okay. Shall we start? That's the answer. 10 for 50. Midu? Same. Uma? Same. Ima?
I get calculation.
Okay. Shan? You said 62, 7. Okay, you're also in 10 for 50 now. Right. Shan, explain now. Mm-hmm. Mm-hmm.
Then you calculate HTML
Mm-hmm.
models. Then deduct the double rate.
Mm-hmm.
Then deduct the inheritance paid.
Mm-hmm.
And we get it.
Right. Okay. So how much is the inheritance tax due on the lifetime gift as a result of Bruce's death? Bruce died on 16th July 2023. He made one lifetime gift, 10th November 2018, to a discretionary trust. Okay, so come to ATX. What is discretionary trust? How to calculate from their side? We will learn there. Good stuff are there for that. He paid lifetime tax of 52,250 and the gross chargeable transfer value is 586,250. Okay, slightly straightforward answer. 586, how much is the value? 5250. From this, you're minus this, right? $250. Correct. So once you minus this, how much is the value?
60.
Then you applied 40% on this. How much is that?
4.
Right. On this, you apply the taper relief. So taper relief in this case is how much? 40%. So that means 60% is taxable. Correct? 40% taper relief means 60% is taxable. So I take 60. How much is that? But there's already paid IHG, right? 52 something. 52 to 50. How much is the gap? Sorry? So this should be the answer, right? Correct? All are okay? Father? Okay. Since the gift was made within 7 years, why are we taking the nil rate back? So it doesn't matter whether the gift is within the 7 years or not. Once you, not you, once a person is dead, you are entitled to claim the nil rate band as well. So that is why I took the nil rate band. Are we okay, Soumya?
Think that it was a CL.
Hmm.
So.
Can be, but when you die, we give you a nil rate band anyway. Got it? No? So we feel sympathy about you. No, not kidding. You will get the nil rate band once you dead anyway.
But if they
Sure.
back from.
Correct. Either way, you get the nil rate band when you are dead. So another plus point for Shah. Yeah, I agree with your questions, guys. But like I said, when a person is deceased, he's entitled for the nil rate band again. You're retaking the nil rate band. Agree, you might have deducted that, but your gross chargeable amount is prior to deducting the nil rate band, if you recall properly. The figure they have given is the gross chargeable value. That is why we straight away take that. So 360 or 25 is not deducted from this one. We started from gross chargeable value. Correct? Not from the taxable value, isn't it? So gross chargeable value is prior to deducting the nil rate band. That is why I gave the nil rate band again. I started prior to deducting that. Agree? Soumya, Rifki, are we good now? Right. Can I move on to the next question? Okay, I got another question. Is it enough if we look onto the study kit questions? In the study planner, if you can try some from BPP or Kaplan study revision kit, that will become handy. Don't rather than just relying only on the study hub. Better if you can do some questions from revision kits as well. Next question. Okay, another interesting one. Give a try. Huh? Done. Who's that? Okay, let's start. Uma, what's the answer? Doing. Uma? Huh? Now don't tell me I'm also doing. 340, 2,300. 340, 3,200. Okay. Rufina? 398, 400. Okay. Isha? 134, 1,34,000. 440. Fadil? Okay. Abdullah? Midu? Okay, I got two answers from online, 198, sorry, 398,400 and 396,000. I don't know, I'm really happy about Fadil's improvement today. No, no, not mentioning that word itself is a big improvement.
You went I.
Okay, I got another answer online, 396,800. So today it's fine, but December 3rd, don't take different answers. Get the same correct answer. So all of you are on the morning slot, right? Is that morning means? For you, it's your school, right? No? I have Peters, no?
Yeah, 380,000.
380,000?
For
380,400. Padil? Not sure. Missing something somewhere. I'm pretty sure that is a number. Okay, let's give a try. How much inheritance tax is payable on Brian's death estate? Brian died on 11th December 2023 and left an estate worth 1,276,000. Okay, missed. Okay, 1,276,000 pounds to his daughter. Brian's main residence, valued at 300,000 pounds, was included in the total value of the estate. Brian made a transfer to his sister on 18th June 2018 worth 220,000 pounds. Now, this is, they are not mentioning as gross chargeable figure. Keep that also in mind. Now, how should we start this?
estate value.
What should be the starting point? Okay, estate value is 1,276,000. Let's start with that. 1,276,000 is the estate. Then nil it back.
So shall we go for that and come? I think in that one.
So what then come?
220 minus 3,000.
What is the right order?
In some order.
Okay, what is the right order?
Taking main residence,
220
First, you have to take residence, nil rate.
back. 175.
Is it applicable here?
Yes.
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 Yes, because he has a residence. He is transferring to daughter. Daughter means direct descendant. So residence nil rate ban comes into the picture. 175,000. Agree?
Yes.
So what is the way of measuring residence nil rate ban?
Overall,
Great. Lower of 175,000 or market value of the residence. So in this case, 175,000 is the lower. So I deduct that. 175,000 from here. Then how much is the value?
1056.
one, 0, 1. So 1, 1.
Hmm?
1.
Sir, 1,101,000.
Yes, sir. Okay, good one. Now, nil rate band comes into the picture. So your normal nil rate band is 325,000 pounds. Can you claim the full here? You can't. Why? You have given a gift. Gift of 220,000. Can I just deduct it from here?
Allowance 3,000 this year, previous year.
6,000.
Great. So altogether 6,000 you can deduct. That means 214,000 only you can deduct here. Agree? Then the remainder is how much? Yes, sir. Hmm.
Will go there is a direct calculation.
Direct in the sense what?
Everything one go.
I'll check. So what is the net figure now?
It is 9.
990. Yes, sir.
Yeah, right.
Okay. Now what should we do?
Into 40%.
Great. So 40% comes into the picture. How much is 40% of this? So we got the answer there. Are we all good there? Any questions? Are we good or do we have any questions? Anyone? Right, I got a question to re-explain. So I'm starting from the beginning and do a small re-explanation. No one is in a hurry to go home today? No one? Break after section D. Only few more questions. No one in hurry to go home?
Sir, why we don't deduct
Type relief is applicable for which? This is like this is death estate, right? So let's say a person dies, then for the lifetime transfers, type relief is applicable, not for the death estate. Because for death estate, you can't figure out the time range even, right? Based on that, only type relief is given anyway. That of course.
First 3 years, 0.
So that of course you have to figure out why you have taken that. I think Shan, you have the Shan, I think you are the best friend in the world. Yeah, as a lot about you. So we especially saw that during the Halloween. Right. So I'm re-explaining the process. I start with the estate value, 1,276,000 pounds. After that, residence nil rate band is coming into the picture because this fellow has a main residence and he's transferring that to the daughter. So daughter is a direct descendant, so residence nil rate band is applicable. So residence nil rate band would be the lower of market value of the main residence and 175,000 pounds. Lower is 175 because the market value is 300,000 in this. So I took 175,000 pounds as a residence nil rate band. Then I can claim the nil rate band. So to claim the nil rate band, there was another gift given. I have to deal with that gift first. So that was 220,000 pounds. But for that, annual exemption should have been claimed, right? They have just given the gift value, not the value after exemptions, not the chargeable gain as, not the gross chargeable value as well. They have stated as a gift value. If it is a gift value, we have to reduce the exemptions or reliefs. So we have annual exemption for 2 years for that particular gift. So 3,000 plus 3,000, 6,000. From 220,000, we deduct 6,000. Then the remaining gift is only 214,000. That we deducted from the nil rate band because for that we can claim nil rate. Correct? At the time of death. Then I deducted that. Remaining nil rate band became 111,000. That also I deducted. Then the taxable estate became 990,000 pounds. Simply apply the 40% inheritance tax rate on top of that, which gives us a IST of 396,000 pounds. Are we good? Noah, Arshad, are we okay? Arshad, are we good? Right. Then I am moving on to the next question.
Sir, 3,000, the wording for that is AE, right?
AE, annual exemption.
The AE. The AE stands for what?
Annual exemption amount. That is for CGT.
That is 6,000.
Yeah.
AE stands for
Annual investment allowance. Or there's an insurance company called AIA as well. And there's another something in front of our building as well called AIA. I don't know what they're doing. No, I honestly don't know what is their business, but there is a another AIA in front of PPIA. Instead, I don't know what is their business. Okay, that is not applicable for tax, so we'll start. Mr. Shah, it has nothing to do with tax, so let's focus on tax. Okay, read this question. Exactly.
Yes, sir. We did yesterday.
So I told you some questions are copied from past papers. So you know the answer, then I will not waste time on this one. We discussed this yesterday.
Yes.
The answer is 3. If you file the return on time.
Definitely change the format.
No, all names are even same. So the correct answer is C. If you submit on time, system will automatically calculate the return or the figures for you. You should have come yesterday. Yes, the recording is there. Why not? No, they are uploading same day now. Okay, I'll just explain. First one, less than 1,000. It's not that you don't need to file the return. If it's less than 1,000, you can refrain from getting yourself classified under POA. Still, you need to pay the tax, right? Under the normal method. So, paying the tax means you have to submit the return. It's not an exemption for the return. It's just an exemption from POA. You are good? Right. Then moving on. Okay, this one. Right. So, who's doing the amendment? Taxpayer. If the taxpayer is making an amendment, you have 1 year, 12 months.
HMRC
From the, yeah, HMRC 9 months from the date you filed, from the actual filing date. If it is other way around, if it is the taxpayer from the filing date, that means 31st Jan. Yeah. From 31st Jan, 12 months. So 12 months from 31st Jan is 31st Jan 2025. Actual filing date. That means the actual date you have filed. From that, HMRC has 9 months. Yeah, here they are asking for the taxpayer. No? If it is a taxpayer, he has 12 months from the deadline to file. That is 31st Jan. Are we okay? Correct? Then we are sticking to answer B. All good? Any questions? Rufina, we are okay? Right, I'm moving on to the next question then. Mr. Shahan. Okay, go ahead with this one.
So it's very obvious.
Obvious. Okay. What's the answer?
0.
Why?
2,400 plus 0 divided by 2, 0.
What? Answer is 0. That is fine. Your explanation. Why should you divide by 0? Divided by 0?
Yes. Income tax.
Think.
So less than 1,000 is rate.
Okay. Yes. Please explain, Abdullah.
Yeah. We do payment account based on last 6 years.
Yes. Agree. So be careful on the wordings. They are not asking for the tax payable. They are asking for payment on account payment. So payment on account happens based on your last year's tax liability. Correct? And for that, the question Fadil asked is there. If your last year's tax liability is less than £1,000, you don't need to go for payment on account. Agree? So if I take this person, Gilbert, his income tax plus class 4 NIC, 300 plus 320 is only 620, which is less than 1000. If so, he don't need to go for POA on the current year. So POA payment would be zero. He will have to pay a tax. That's a different story. But his POA is zero. Clear? We are all good?
The EO, this is always income tax plus class 4 yeah, right?
We are good? Any further questions? Right. Then can I move to? Oh yeah, okay. Okay, 15 minutes. Guys, let's take a quick break. 15 minutes. 15 means 15, huh? Exactly 11:31. Oh, today I'm not sure till what time we will go somewhere. Depends on the questions you guys have. So class will go up until I clear out all your questions and we finish off the paper. Hopefully soon. Video, I think yes. Let me confirm that. I'll check with them and confirm that to you. As far as I know, it should be uploaded to your LMS. Sure, sure. As far as I know, it is uploaded. I'll check with them and confirm to you after the break. Soumya, for your question, they will upload the videos today itself, so don't worry. Okay, shall we start? Where are the others? Huh? Where is your buddy? Just behind you. So that means you change your buddy to Abdullah. You guys know from universe. You also know a lot about Shamdev. Not like that. The things we know, he don't know, is it?
Okay.
So we can publicize. Can make you a celebrity. Okay, let's start. Now we are moving on to section B. Which of the following statements is true concerning inheritance tax exemptions for lifetime transfers? Try. How? They have to explain. Wait for the others. Everyone, I need the answer. Sorry. Only 5 minutes left. Yep. 4. Don't bother, Ishak. He will come. We want the answer from everyone. Okay.
So third one. So because other party is 1,000.
Okay. 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 Midu? Online guys, I didn't receive any answers from you all. Altaf, Arshad, Arundhati, Basil, Rifki, Shihab, Sihat. Okay. What? Shan, wait, be patient. Okay, everyone goes for C, is it? All goes to 3. Okay, let's see. So, what is the true statement they are asking? So that means everything else should be false. If PET and CLT are made within the same tax year, the annual exemption will always be applied to CLTs. This is because unlike CLTs, PETs may never become chargeable. Is it true? No, right? We go for the chronological order for annual exemption. Nil rate band, yes, we always consider only CLTs. But for annual exemption, we don't have anything like that. We go by the chronological order. 5-4. We okay? Right. Small gift exemption applies to transfers to both individuals and trusts. Again, false, right? That is only between individuals. Correct? Third one. A gift in consideration of a marriage from an individual's parents, siblings is exempt up to an amount of £1,000. Is it true? How come?
It falls under any party.
Okay.
Okay, 1,000.
Okay, is this any party? Okay, so it's good that you guys realized it properly that we are talking not about parents or the couple's own siblings. Both are not discussed here. We are discussing about siblings of the parents. That means your aunts and uncles. Correct? Right. So yes, that is true. Any party, it's 1,000. So I'm happy that you guys realized the trick here. The trick was parent siblings part. So if you realize if it is not, it's not about parents, it's about parents, brothers or sisters or whatever, then yes, answer is C. Okay? Sorry? That is terminal Australia. Yes. This is annual exemption. What is that is? Loss is a separate story. Annual exemption is in inheritance. Losses are in income tax and corporation tax. So what you're asking is coming on the income tax part. That is terminal loss relief when you are seizing the business. This is inheritance. Okay? Good. Can I move on to the next question? Right. During lifetime, no. Yeah. Yes. Yeah. Second scenario, yes. Why not 4? Okay, I got a question. Fourth one, transfers of individual savings accounts. Premium bonds are exempt transfers for IHT purposes. That is, yes, transfers are exempted, but on the death estate, if there is any balance on ISA or premium bonds, that is taxed for death estate purpose. Transfers means if you are sending something from ISA or premium bonds, that is similar to your income tax and your NIC and all, this is also exempted. But on the death estate, nothing is exempt. Everything we are taking except for the interest spouse transfers. Lifetime transfers, ISAs are taken under the normal ISA method. We are only taxing for death estate on the ISAs. Are we good? Altaf, are we okay? Right. Guys, are we good? Can I move on to the next one? Rufina, 100% sure? Right. What is the total amount of IST exemptions can be deducted from the transfer from Thomas to his niece on 12th April 2016? Carefully read and tell the answer. Don't go from the surface. 7,000. Midu? Okay, let him decide. Exam, you are not there to help him, no? If you are a good friend, let him decide. So you can judge whether he's a good friend or not. Ishak? 3,000. Sufina? 10,000. Yes. 6,000. 6,000. Uma? 7,000. Abdullah? 7. Midu? 7. Fadil? What's the answer? Sure.
Sir, I got it. Sorry.
Again, you can decide about the friendship. Isha?
You put the answer on.
So I got few answers, 6,000, 3,000 and 7,000. Correct? Let's see. Thomas died on the 11th January 2024. Before his death, Thomas made two gifts during his lifetime. On 12th April 2016, he gave a gift to his niece for her marriage worth of 9,000. So to the niece, it's a gift based on the marriage. Then what are the exemptions applicable here?
1,000.
1,000 is what?
Value.
Marriage exemption 1,000. Okay.
And then I will exempt 8,000 and 3,000. Currently, I pay
Currently 3,000.
previous year.
So altogether 7,000. All are agreeing with this? Any questions for this one?
So these also fall under the sorry.
Any party?
Yeah, it's outside.
Yeah.
Not persons. Other
Niece is not your brother or sister, right?
their son. Or their daughter.
Yeah, okay. Okay, Ingmar. Shall we move forward? I would like to comment, but no. Third question. Those have some good concepts, no? How much lifetime IHT was payable on the gift to the trust on 2nd September 2016? Everyone go ahead and do the calculation. Yep. Yes, go ahead.
We cross it up and then minus 10.
Let you decide. When I'm explaining, I will explain. Otherwise, I'm giving the answer. Yeah. If I tell it now, that is the answer for the question. Don't mention that answer. If you don't match to the answer, you will not have the answer in the exam.
So here.
Yep.
Sir, donor is 25.
Don't know. You tell me.
Days on 8.
Okay. If next. Yeah, I got some answers online. 1 15,000. 2 18,750. Uma, what is your answer? Doing. Imad? Imad?
Yes.
Answer?
According to the leading.
According to what?
Sorry,
Okay, 18,750. Shan?
but the only problem is I forgot the donor only the closing parts. So.
Dhoni is retired, I think. So no need to worry about that. Shan? Okay, what's the answer? 181, 250. Okay, Profina? Trying. Ishak? Trying. 18,750. Okay. Fadil got same. Ishak, how you got 18,750?
Can you do that?
You don't know what it is. You don't know why do you cross it out? Midhu? Midhu, how did you get the answer? Fadil. Okay, good. Shan? Midhu, explain. Multiply by 20 divided by 80. Okay.
Oh, 25%.
Or 25%. Okay. All right, let's see.
So then, wait now.
He also made a transfer to a trust on 2nd September 2016 worth of 400,000 and paid the lifetime tax on it. So, okay, he is dead now, right? Okay, so how do you do the calculation then?
Yeah, asking back in 2016. 2016.
How much is
There is no lifetime. Why?
trust is a CLT or a PET?
CLT.
CLT. Then we do have a lifetime payment, right? So what is the requirement first of all? They're asking for the lifetime IST, not the death one, isn't it? Correct? So if it is a lifetime IST, the question is easy. Right? What is the gift value? Can I claim the nil rate band fully? Do I need to claim the nil rate band here? How about my AE? Why don't I deduct my AE?
Last gift is
Both gifts are falling within the same tax year. Correct, right? Both are falling within the same tax year. If so, for neither one, we already claimed current year as well as previous year annual exemption. So no A is to be deducted here, isn't it? So AE would be 0. Then I can deduct nil rate band. How much can I deduct? Full. So earlier we claimed 7,000 as exemptions, no? But the gift to needs is 9,000. 2,000 is remaining. So why don't we take nil rate band to that and get remaining here? So the full gift to needs was 9,000. We claim 7,000 exemptions. 2,000 is remaining. So why can't I claim NRB 2,000 for that? Yes. That's what they also say. So since it is a PET, you don't need to use NRB there. So your NRB is fully unutilized. True. That is why we are not claiming nil rate band. Then you should have claimed. So now I am claiming full NRB here, 325,000. So my remainder will be 75. Then I need to check who pays the tax. In this case, donor is paying the tax. If so, the rate will be 25% as a shortcut. Or else you can multiply by 20 and divide by 80 story as well. Or shortcut, simply multiply by 25%. We're good?
This is gross amount for it.
This is net, no. That is why we are using 25. If it is due knee, then we assume this 75 is the gross. That is why if it is due knee, we apply 20%. That is the principle of tax.
They could say, "Hey, don't pay scale."
They have. If they don't say anything, do nothing. If they don't say anything, you don't know who's paying. I'll come to that. Let's do a quick recap on IHT after this. So what's the value here? So this would be the answer. All are okay with this? Shape? All good? Okay, let's do a quick recap on IHT then. I can see you have some questions about IHT. Isn't it, Shah? If I take IHT, we have IHT in 3 situations. Lifetime transfers on death, then you have death estate. So we have 3 situations where IHT comes into the picture. First one, while the person is alive, the gift or the transfer is done by the person. Once the person is dead, on his lifetime transfers, finally on the death estate. So 3 situations. Agree? Let's go one by one. 3 situations are okay? Right. Then lifetime transfers, like Imad asked, we have 2, actually 3. We have exempt, we have PETs, we have CLDs. Sorry. We have 3 kinds. That also everyone agree. So what is a PET? Great. This is by individual to individual. So for PETs, what happened? No IHT. So IHT would not be there. Correct? While the donor is alive, no IHT for PETs. That is also clear. But we claim AE we claim, NRB we don't. Agree? So PET, this is the story. Any questions? Right. Then exemptions. We had different exemptions. What are the exemptions we had?
Civil partners.
Okay. Interspouse was there. What else? That is it. Is it? Sure.
It was marriage.
Marriage exemption was there. Okay. You have small gift exemption. Out of normal expenditure was there.
If it doesn't affect the individual's.
We'll discuss one by one again.
Was it that?
Yeah. Then you have annual exempt amount. Agree? These are the exemptions we had. Guys, focus. I'm just trying to finish off a full revision of IHT as well, because I just so that you guys know, but you're not confident about the things you are speaking about IHT. So I'm just doing a full recap here. So exemptions, interspouse, yes, I agree. Then we have the marriage exemption. Marriage exemption, we had different classes. If it is parent, per parent, we had 5,000 pounds. Correct? Remote ancestors, 2,500 pounds. Is it?
Yes.
Yeah. Grandparents and remote. Okay. Party to the marriage,
No.
2,500.
Party to marriage.
Yeah.
Ah.
You're not married, no? So then, and I wanted to give an example, but no. Sorry? I don't think these two will like. One of them will not like. So it's either Shah and either Fadil. So If it is Shan, Shan will not like. If it is Fadil, Fadil will not like. So let's keep that example. So the last one is any party to the marriage, £1,000 exemption was also there. That is marriage exemption. Small gift exemption means great. So for one person throughout the tax year, the cumulative value of the gift given by you, if it is 250 or less, then that is considered as exempt. Not per gift, the cumulative value of the gift during the tax year. Agree? This has also been tested in certain papers, guys. They gave so many gifts, cumulative figure exceeds 250. Then tax.
The older.
Whole amount is taxed. Whole amount. Whole amount. In gift, there is nothing called balance. You can't split the gift, right? Either taxable, either no taxable. Yes. So it's like this, no? One of my friends told me a story. So the fellow has went to purchase the land. So the landlord has given some price, but this fellow has a slightly less amount. So he has told the landlord, look here, only two options, no? Either I purchase or I don't purchase. But if I purchase, no credit, full amount, I give you on cash. Your choice. Same as that. If a gift is there, either taxable or exempted, no partial claims for gifts. You're good? Right. Then, normal expenditure, from the normal expenses. That means if it doesn't affect the estate of the donor, if it doesn't affect the lifestyle of the donor, we consider that also as an exempted one. Example, Fadil gifting someone £100. Doesn't matter for him.
He has a trading income or some, whatever the income is in millions. He has given his daughter around 300 something, 300 or 300. I thought it will come under all gift exemption.
This one, don't use in the exam unless they give you an indication that it is falling under this category.
What is it?
Because it is subjective, right? You might feel 300 from 1 million is not material. But Bill Gates might think £300 is material for him, isn't it? He does. Haven't you heard that story? Bill Gates and his daughter? Yes. Haven't you heard that? Okay, so once the fellow has gone to a restaurant, to Bill Gates, right? So the waiter was doing an exceptional service. When he was leaving, he has kept $10 as the tip. Then the waiter's face was very shaky and he was faint. And Bill Gates has asked why. So the waiter has told, no, sir, your daughter also visits us very frequently. So she always keep minimum $100 as the tip. You being her father, you are giving only $10. So that's why I'm upset. So can you imagine Bill Gates' response? No, he had a more creative answer for that. His answer was, her father is one of the richest buggers in the world, but my father is a carpenter. Right? So materiality, it's up to, yes, exactly on the thing. So materiality, we cannot judge unless there is a specific guideline given in the law itself, but for this one, law hasn't given. So it's subjective. Therefore, in the exam, just because the fellow is having millions and we are talking about £100, don't go and apply this unless the examiner gives a hint like this is not a material amount for him, kind of a hint if the examiner is given, yes, go ahead and use that. Otherwise, don't use this normal expenditure out of income rule for IHT in your exam. Are we good? Because that is very, very subjective. What is material for you might not be material for someone else. Correct? Like I said, if you ask me, 100 pounds is material for me. But if you ask Fadil, it's not a matter. Isn't it, Fadil? We are okay? Right.
So if it is material only, take it.
Not material. If it is material, it's a reduction in your statement. We are good? Then annual exemption, we all know what happens. So I will not spend time on annual exemption. So exempted ones, are we good? Small gift exemption, 250. You were sleeping? Okay. Exemption part, any questions? Yeah. 2 years, only last year, current year and last year. You are talking about AA.
So
3 years is annual allowance. That is pension. You dear have to find some way to fold in your mind for different taxes.
obviously that person is earning 1 million and 300 was the material. Now, what is the now? Is it taxable?
General terms, tax it.
Because
Because
it's more
more
than 250.
Yes. Unless the examiner gives you an indication like saying this is not material for this fellow, or he gave another gift to someone and saying that is not material, kind of a thing. Correct? Right. Any further questions on exemption side? Can I move on to CLT side now? Exemption side or PET, any further questions? Can I move on to CLT side then? Right. CLT means anything except for, yeah, except for these two, that is CLT. Correct? For CLTs, we charge IHT even the donor is alive. Yes, we take AE and we use nil rate band as well. Correct? Apart from that, what are the any other specific things we discussed? For IHT, who pays the tax decides what is the tax amount. So if the donor pays 25% and we assume this is net, that means let's say the value is 100,000. IHT would be 25% of this. That means 25,000. The gross value would be the total of this 125,000. This is the gross chargeable amount. Correct. Are we okay? This is the figure, the base figure for our death calculation. Correct? Not this. Are we good? Not good. Which part is not good? Last part. Okay. So we say this is the net one. Then to gross it up, what should we do? To gross it up, what should we do? At the tax. So this is 100, tax is 25. Then the gross one would be 125. This is the starting point for death tax. Not 100,000. We're good? Clear? Are we okay? Fine. Right. Any questions? Up to now? Yes, sir. Is it? That's fine. That's called it. I'm going to throw something at you. Okay, so that means I have work after the class. Good. Sorry. That is 100,000 is net figure. What is DF tax? Okay, DE tax, the state tax. Okay, are we good? Ishak, are we okay? I should keep a secretary to write, no? Who has the most nicest handwriting here? So we can give Fadil to write there. We explain Fadil to write. Oh, Sham's handwriting is also good.
Yeah, Shah is better. Take those notes.
Yeah, I've seen it. He has nice handwriting. Like a girl. Usually girls' handwritings are good. Ah, okay, sorry. Wow. So if the donee is paying, this donor paying, no? If the donee paying, okay, now I'll use yeah, otherwise this fellow will ask, this is D, so God, what is that D? Right? If the donee is paying, we assume the value is in gross. So if that is the case, the above question 100,000, we assume that is the gross figure. So this is gross there. 100,000 into 20% in this case, this is the tax. Okay. And this is going to be the value that we take for your death, yeah, death tax as well. Are you okay? Dhoni. We're good?
Sir. My thought is, there is 25,000 and 20,000. Whatever the scenario after this date, we have to reduce an amount. We already paid here, this date we have to reduce. We reduce 25, 20, like whatever the amount we have to.
Yeah.
It's plus 20,000 we have to reduce if it's. It doesn't matter.
Whatever you actually paid, we deduct it.
Whoever pays. After that.
Someone has paid HMRC's point of view.
Who has to pay the tax? Of the dead person or the trust?
If it is about death estate, it is the representative. Trust is the representative. I mean, representative. That is on the death estate. If it is on the lifetime transfers, then the beneficiary, in this case, trust. Because the asset has already given to you, right? Let's say I give to you, I die. Love to. So, yeah, I'm fine. So, I give to you and I die. Then, on what I gave to you, on my death, you have to pay the IHT. Yes.
No matter who paid.
Doesn't matter. You are the beneficiary because I'm already dead, right? So he can't take from me, no? Asset is with you. I gave the asset to you, no? So then they have to catch you, right? Isn't it? If it is on death estate, it is on my estate, then the representative has to pay because assets are not allocated to anyone yet. Exactly. Prior to transfer, they pay all the taxes, all the liabilities. Net amount they will split between the beneficiaries based on the last will, if not based on the court orders. Yeah, he got the benefit, right? So then he has to pay. I'm already dead. No? You can't take from me, no, I'm already dead. Correct? Anyway, after results comes, I will be dead. Based on the way that you guys are raising questions, I am confident. No, you guys will be alive. Sorry? No, the worst case, your parents will beat you. That's it, no? Why? Who else is going to do something to you based on your results? Good boy. What's the worst thing can happen? Because of exam. How old are you? Okay. Even scholarship students, like grade 5 students, don't think to thank themselves now. When that was around 10 years ago. What problems they have? Go around. How old are you now? How old are you now? Okay, go around 15 to 20 years back. 15 years. Think about your time of doing scholarship. Then tell me the answer for the question you said. Yes, I think you know the answer. Okay. Unless you are like me.
Yeah, books.
Ah, no, in my case, it's pretty easy. No? So, worst case, my mom will beat me. I don't care a damn about that. My father is very open. He will be like, no, no. He's pretty open. He's like, if you pass, it's also for you. If you fail, that is also for you. When the right age comes, don't come and ask money from me. I paid, I spend on you. The rest you have to take care. If you do well, you will survive. You don't do well, still, I will survive. You, I don't know. Simple as that, right?
That's enough motivation to study.
More than enough. Even when I, asked about my wife and I went to my father, I told him, I found a girl, so she's also okay. What do you think? Like, I was asking me, I'm not marrying her. Yeah, okay, marry her, no problem. But I'm not spending on your marriage. You have to take care of that. Simple as that. No, ask.
Yeah, after class.
Now, if you, when you go and talk to your father about job and everything.
About what?
They is getting advice from you.
Okay, ask. My father is not a big deal.
Expecting an answer.
Sorry?
Expecting an answer.
I know him, no man. He's my father, so I know his reaction. In my case, he's my father. I know him for a while, right? So I knew his reaction. And I knew that I had to do everything for sure. So fair enough, right? It's my marriage, I have to do the things. It's not his problem, no?
That had already.
Yeah, agree. Anyway, he will need that. Not from father, isn't it, Shah? For Shan, it's not from his father, but one mistake. Actually, you don't need to spend. That also, the related party will spend. I'm pretty sure about that. Yes, coming back to lifetime transfers on death. So lifetime transfers on death, what happens? Now we don't care whether it is PET or CLT. Both are taxable for IHT. Yes, but one condition is there. Only the things falling within the last 7 years. Correct? And you can claim your nil rate band as usual. But we have a tax rate which is higher now. Tax will be at 40%.
Even when claiming after this doesn't affect whatever if you have claimed for CLT before. Doesn't matter. It's already new for that particular day.
Then you have an extra benefit here. Tapper relief. Tapper relief is given based on the time gap between the date of gift and the date of death. Starting from more than 3 years. Up to 3 years, no tapper relief. From 3 to 4, 20, 4 to 5, 40. Likewise, it goes up each year, 20% increase. Agree? But the table, you don't need to worry, that will be given to you in the exam in your tax rate tables. Clear? After that, if there are any IHTs already paid on CLT, that also you can deduct. Correct? Then you get the final value that you need to pay. That is also okay. Tax value. On the tax value. That is also clear? Right. What is the starting point for death tax if 2 pays? If 2 pays, it would be, in our example, it would be the 100,000 amount which we discussed. Then coming to the last one, death estate. So what happens in death estate? Boys, father,
They ask the value of death estate.
value of death estate.
They can calculate.
Right. So how are we calculating the estate value?
They have made any transfers.
First of all, we need the estate value, right? So what do we do here? Income.
Any transfers he has made.
Market value of assets. From that you minus contractually obliged liabilities. And you minus any funeral expenses. Anything else?
Exempt legacies.
Okay. Exempt legacies also you can deduct.
The spouse.
That is exempt legacy. At the tax calculation, you are not deducting it. Anything else that you deduct?
So that pro forma that, this one is only to calculate
Death estate.
estate value. There's no anything else in there.
Then, if there are any taxes
Liability.
outstanding, that also can be deducted.
Interest.
Yes, we took that. That is one.
Yeah.
So we deduct all this stuff. Then you derive at the taxable death estate. Correct? On that, you apply 40%. If there are any residence nil rate band or nil rate band, you can deduct. Okay, we'll include that also. You can deduct residence nil rate band. After that, you can deduct any remaining nil rate band. After you do all these, you need to apply 40% to tax. Correct? Apart from that, we had only exempt legacy is inter-spouse. Yes, correct. Only exempt legacy for your syllabus is inter-spouse transfers. There are a few more. You can learn that in ATX. We'll meet up again in ATX. So you can learn that on ATX. For tax purpose, 5-6, it's only inter-spouse transfers. Are we good? Any questions up to now? Then, after everything, I'll zoom out. Then you have something called residue, which we discussed several times. So I will not spend time again on residue. I explained this again and again in few occasions. So previous recordings might help you on the residue. Are we okay? Right. It's only 12:30, so we need to finish the paper also. Okay, now you guys asked me to zoom out. So if you zoom out, this is how it comes. The whole IHT in one diagram. This should have been your short note technically, if you prepared one. Oh, what a nice idea. Right case. If they don't appear, yes. Yeah. Lifetime transfers. First one, lifetime transfer. Second one, lifetime transfer on death. Yeah, okay. So this should have been your short note for inheritance tax. Guys. Anyone prepared something like this? Good boy. Wow. What? You had to explain what? Which one? A short note.
Percentage.
Will do. Will do. Yeah. Obviously, if he comes, it's in front of camera, right? So Vishal, we'll do it today. Huh? No, we'll find time. No one is in a hurry to go home, no, except for you. All okay? Na? You don't need to hurry. I'll ask Harry to come to pick you if you want. The fellow must be, that fellow is also should be playing games by now. So tapper relief is deducting in IST 40%. Yes. From the IST 40% only you are deducting the tapper relief. Up to now, any questions? No, residue is something different. Check the recording. No, it's a completely different thing. We discussed that several times. Just check the residue recording, guys. That is really crucial. What? Yeah, after everything, but I'm pretty sure you didn't understand that part. Anyone else who has a concern about residue? Be honest, huh? Mr. Shah?
So there's another term you use, RACE.
Spelling don't mind. The word is residue. So yeah, becoming Ishak part 2. What did you do 6 months with him? I thought you were studying online. Half of the classes you were online. Last time was the same thing, right? Yes, we need to do. But we need to revise as well. Obviously, it's not just the paper. Revising and doing the paper. Right, up to now we are okay. Anyone else who's having a question about residue? Shan? 100% sure. What is residue? Minus any.
Transfers to spouse.
Okay. Okay. That is residue. Sure. 100%. Then you're wrong. So if that is your answer, you're 100% wrong. Okay, quickly let's recap residue. Can I explain? Okay. So if they ask residue, if IST is given 90%, there's a possibility they will ask for the residue. If they ask for residue, you have to follow 2 steps. Number 1, what we did, calculate the tax. This is step number 1. Step number 2, get the taxable estate prior to residence, nil rate band and nil rate band. Without claiming for these nil rate band or residence nil rate band, prior to that, take the taxable estate. Correct? So that means after deducting exempt transfers, but prior to deducting NRNB and RNB. Clear? From that, deduct specific legacies. If you are transferring to any specific person, deduct that. Then deduct the IHT. That would be your. Now, don't ask me about the spelling. My spelling is anyway bad. Then you derive at the residue. Are we okay? So residue always 2 steps. Step 1, calculate the tax. Then go for the residue. We're good? Okay. Now fully IST is revised once again. So after doing all this stuff, if you lose marks in IST, I am going to kill you. Okay? Start? We're good? Right. Then can we come back to the paper? Okay. What is the nil rate band available when calculating the IHT on Thomas's death estate? A straightforward calculation. How? Okay. Everyone has calculated?
Yes.
Oh, 60.
Okay, let's read the scenario first. His wife Sarah died in June 2008. Her unused nil rate band was 62,400 and was therefore available to be claimed by Thomas. Thomas as personal representatives after his death. So Thomas has also died, no. So that means whatever remaining from Zara, that also can be claimed. And at the latter part, they are saying at the time of Zara's death, the nil rate band is 312,000. Agree? That means when it comes to Thomas, 64,000 to so 62,400 is the remaining nil rate band, right? Divided by her total nil rate band is 312 into the current one is 325. Correct? I think this is coming for 65. Plus he has his own nil rate band as well, right? 325,000. So that comes to this would be the answer there. Correct? All are okay with that? Option one is to the other spouse. If that person is also dead. Yeah. We're good? Any questions? All okay? Awesome. Okay, I got a question to explain it again. So I'm just revamping once more. In this question, they are asking the overall nil rate band available for representatives or the personal representatives of Thomas. Thomas, right? The fellow's name? Right. So Thomas's wife Sarah has died 2008. She had an unused nil rate band of 62,400, which can be transferred to Thomas. No. But unfortunately, at the time of Zara's death, the total nil rate band applicable was 312,000, not 325,000. So we need to take the proportion that we can take from the current nil rate band. For that, I took the proportion between the previous nil rate band and the unused nil rate band, that is 62,400 divided by 312,000. That proportion I multiplied by the current nil rate band, which is 325,000, which gives me a value of 65,000. That means from Sarah's nil rate band, 65,000 can be transferred to Thomas. Apart from that, Thomas has his own nil rate band as well, 325,000 pounds. We claim that also. As a result, Thomas overall has 390,000 pounds as the nil rate band. Are we good? Shan, sure. Siat, are we okay? Right. Coming to the last question from inheritance here. What is the total available residence nil rate band when calculating the IST on Thomas's estate if the relevant elections are made? Carefully do this.
So here comes that lower option
Think. Do the calculation.
because 175 is 175 both things. But the house is 300 minus 60 is 240. So should we take the lower means 240?
I don't know. You have to tell me.
They're asking how much.
Okay.
They're asking how much they can.
You decided, tell me the answer. If it is the exam, this is an exam paper, so you have to tell the answer. Everyone, quickly, go ahead with this, sir. Alone. Go ahead with this alone.
240.
240. Okay. Done. Great. The others? Proof here. Doing done. Done. That's the answer. 240. Imat?
So,
I don't know. You have to tell me. There is no ifs here. Midu? Abdullah? 240. Ishaq? 350. Okay. But I respect Ishaq. He is the only fellow who has the guts from the physical class to go to a different answer. No, he trusts his answer, that means. I like that. Vishak, honestly keep it up. This is not sarcasm. I'm honestly saying, keep it up. Trust yourself. I like that. Because after you come to our level, you will need that trust. So keep that. You will come someday. Everyone will go, right? No one will stay on the same wage, no. Okay, I got one answer from online, 175,000 pounds. Midu? 300 or 350? 300. Okay. You 175 into 2. 300, how did the answer come? Sorry? 300, how did the answer come? Sorry?
He didn't expect you to ask.
I didn't understand. Okay. So it's a lucky guess, is it? Okay. Abdullah, why 240? Okay. But you said 240, no? So why 240? Okay, who's Abdullah? Are you Abdullah? Okay. Okay. Guys, keep in mind your buddy will not be there next to you in the exam. So genuinely answer based on your view now. Except for Fazil, anyone else who's willing to explain? Iman?
Yeah.
How?
their house worth 300,000.
Mhm.
Mortgage.
Okay.
That'll be deducted to 40.
Okay.
And then residents will get back available to both husband and wife, 175 for one person. So into two, that is 350.
Mhm.
So when we are doing residence nil rate ban, value of residence and low of that only.
Because we calculate 350 like how state is equal.
Okay.
So 240 the
Okay, I'll ask you a different question. On what basis are you going for 350? How do you know the trans is applicable? Wait. We will let Abdullah to explain. No, you're out for this question. I know you know the answer for this one, so you're out for this one. Abdullah? Okay. Sorry? So that means if wife's nil rate ban can be claimed, residence nil rate ban also can be claimed. Hmm. Okay.
325 also if it is not used can be transferred, but here unfortunately.
How do you know residence nil rate ban is used or not? So nil rate ban, they are straight away say 62,400 is the remaining. Residence nil rate ban, how do you know Zara has used or not? Not for this. I asked from Abdullah. Sorry? No, the concern is how do you know whether wife is used or not? Okay. No, it is specifically mentioned. It's not for the answer. How do you say wife one is claimable? Because how do you know that lady is dead? No, jokes apart. How do you know? Not you. The others. How do you know wife one can be claimed here?
It's no, it can't be because it's claimed by Thomas's personal.
We are talking about personal representatives, no? Rufina? Don't stay too close to this, you know. The question is, how now you all went for 240, no? So 240 is because 350 you believe is the available residence nil rate band. Guys, so how do you know Sarah's residence nil rate band is not used? So she shouldn't have used, no, if Thomas is to use that. Then how can we be certain that she has not used that? Sir,
Too serious.
no, we should be serious when we have 2 days for the exam. Not sure. Okay, Fadil, go ahead.
She hasn't owned a house, so she has everything balance.
Exactly. It says she doesn't own a house, right? The indication is there she doesn't have a house. If she doesn't have a house, she cannot use the residence nil rate band anyway, isn't it? For her to claim residence nil rate band, two things should happen. First of all, she should have a house. Secondly, she should have transferred it to her kids. Both hasn't happened here. To transfer, she should have a house. That has not happened here. If there is no house for her, she cannot claim residence nil rate band. Correct? Then wife's one is also available fully. That is why we take 350. So husband plus wife, 350. Houses net value is 240. Out of that, we go for the lower. Correct? Clear? Rufina? Shan? Answer was there, but the reason was not there. What okay, what if this how how can they live together? How do you know? I mean, yes, mortgage is allowed. Yes. Are we clear now?
Without this, they're asking how much is available, then 350 could be the answer.
No. Because even though 350 is available,
Then
you can't claim it, no.
Then 175.
It doesn't matter how much is available. We are always going for what you can claim, no. If your house value is less than your residence nil rate band limit, then available limit will be the house value. You can't go beyond that, no. You have the cap. Yes. We are okay? So guys, when you are doing a paper, I told you this is an easy one. Pre-mocks are generally easy. Then think about your exam paper, how will it look like? If this is the level of your pre-mock. So that is why I am taking extra time to feed the logic to you all. Guessing the answers here, you might get the correct answer for this pre-mock. Exam, it will not be the case. So that is why I am spending time trying my level best to convince you the logic behind the answer. Everything, that's why I asking, it's not to put you guys in trouble. It's just to ensure that you know the reason why you are doing it. If you know the reason, if the same thing is tested in a different depth, then you know what to do. Just figuring out the answer for this one is not the purpose of discussing the paper. Then easily I can give you the Excel and ask you to go through. No point of wasting my time for 6 hours here. Agree? So why I spend time here is to ensure that you know how the answer is derived. Not to tell the answer. If so, marking scheme is there in the portal, you can download from there itself. You don't even need the Excel. Correct? So try to understand the reason behind. So I'm happy at least one fellow is following the reason now. The guy next to you. So, no, assumptions can't work. That's why I say. Assumptions can't work. The why I asked is, now let's say wife had a house. She transfers that to her kids. Then can you go for 240? Then you are getting stuck at 175. So you should know the reason why you are going beyond 175.
So even if she had a house and she didn't transfer to her children, then still it's remaining 175.
Yes, because he cannot claim without transferring to the direct descendants. Correct? So the logic is the important thing, not to figure out the final answer. This is the mistake that I see in your answers when you submit me section C kind of answers as well. Your focus is the bottom number. That doesn't carry any marks, guys. Not even 0.5 in 99% of the time, not even a 0.5. If you don't trust me, log in. Marking schemes are there and check. No marks are allocated for that. This is A level, guys. This is not A level. A levels, yes, you got the marks for that. Not in professional exams. The final value doesn't carry much value for you in the exam. Steps, each working will carry you marks. Focus on that. Focus on how you derive the answer, not somehow getting the answer. Because here you know, since I'm here, I have also did something in the paper. So you assume that is the right answer. So you try to match that answer. That is not the reality in the exam, right? Correct? Try to grab the answer with the reason, except for admin stuff. That is just to memorize, no? Correct? Calculations, always try to get the hang of the reason or the logic behind how we derive the answer. So your focus on the paper, even today, shouldn't be what is the right answer. Your focus should be how to derive the right answer, not to figure out what box to be ticked. Agree or not? What box to be ticked is important when it comes to tax admin. Nothing to remember, nothing to think there, no. Just put your memory fix. Your memory is good, you will score there. Correct? Generic calculations, you should know how you got the answer. Knowing the answer will not give you anything at all. Are we okay? Clear? Abdullah? Midhu? Imad? Right. Shall we move on to the next question then? Try this one. What is the... Okay, this is a next question. Next scenario. Hmm. Hmm.
2 years something there. So
For that one, easiest thing is if you write under each relief what are the things. That will be easy. Because if I take all the reliefs together and try to discuss that, that will be a separate 4-hour session. Not like IHT, isn't it? Because if you go to calculation wise, yes. If you go to criteria level, then that will be a full lesson. Right? But you have an option for that. What you can do is, take a table. Criteria criteria in the sense, the type of relief, each type have a column. BADR one column, IR one column. So we have 4 reliefs only, business assets. Each one have a separate column, only one page. Under that one page, under each relief, one another row for individual, row for corporate. Then list down the criteria. You have 3 days, no? Each night before you sleep, if you spend 2 minutes and read that, that will be there in your head. Sure. And when you're doing that, if you have any concerns, reach out to me. Guys, give a try for this one quickly. Hmm? 111, okay. The others? Isha? Rufina?
So according to the criteria, council only
Jump in.
when we see all that criteria, then we see that we have the
Okay. Midhu? Doing.
So in case if this was not so better, then only 64 minus 11.
Hmm. Yes. Good question. When I read this, I also had that question for a couple of seconds. I'll explain while doing why we are taking that. So you are confident that we need to take it, but why? Correct. I'll explain why. Everyone, are you okay? Have you got the answer? Some answer, everyone. Don't stick to 111. Based on your calculation, what is the answer? So you are going for 111 down? Right. uh, Ishak? 111. Shah? 111. Abdullah? Did you today? Today in the sense? What's the date today? After the exam. Medu? 111. Right. Yes, I can see all of you all what you have done is 60 plus 64 minus 30. That is what you have done. But yes, I agree with the question Rufina raised. That is, for BADR, you should have held the asset for 2 years, right? We had a criteria like that. But this freehold property, it's only 6 months. Then how can we claim for BADR? We have a question mark, right?
That is only very comfortable.
Good point. So the question is, technically for BADR, you have to hold assets for 2 years. That's a criteria. But this I'll come to that. So the freehold property you have held only for 6 months. Then how can you claim BADR on that? That was the initial question. Anyone has an answer for that? What is the criteria? If the company is seizing, if the whole company, I mean, if the whole business is sold, then we consider business as a whole for BADR. Then in that case, yes, business should have been run for 2 years. But within the business, there can be certain assets which are not business assets. For them, you cannot claim BADR.
So, within the 2 years, the assets should have been
Used for business purpose.
only in the 2 years, so when it can be
No, no.
applied for.
So this one you are not using fully, no? Still you can claim, because what you are transferring here is not individual assets. What you are transferring, your disposal is the business. So
We can claim only when business.
yeah,
Then disposal of assets, right?
So- shares you can. So for individual assets, but when you are selling a business itself also, within the business, there can be non-business assets. Agree? For those non-business assets, you cannot claim BADR. You can claim only for the business assets within the business, and business should have been run for 2 years. Agree? The conditions are clear? Everyone? Isha? 100% sure? It doesn't seem like sure. Shape? Abdullah? What is this? What is this? Okay. What is? Storage unit is like a store kind of a thing where you. Yeah. Right. Is freehold property a business asset? Unless it is a letting company. No, a freehold asset you can use for anything, right? You can use it as a storage, you can use it as an office, you can use it as whatever you want, you can use that. Renting is also one purpose that you can have from a freehold property. Freehold means there is no hold on the property. Basil, are you okay? Right. Can I move on to the next question then? Can you try this one? What is the allowable cost in the capital gain tax disposal computation for the sale of 2 hectares of land by William on 3rd August 2023? A basic question. We did something similar in section A also. Hmm? Yeah, okay today.
Yeah.
Sure. Mhm.
How does it?
The answer is 20,593.8, so 20,500.
So does the legal piece do any sort of?
Should it? Think. We spoke about that.
Depending is like that, so.
We spoke about that in theories. Think.
Hopefully keep them as that. Correct? That's correct. No, yeah.
Even before me. Before being other than.
We had the reason. They have to prove that with the price. We should have said this earlier. Yeah, good thing to consider the can you get this question self is a good improvement considering where you were. You really don't come to class.
But I had the last meeting, that's why last few classes I answered. Same for all subjects.
Yeah, he did that for all subjects.
Like me. Knowing what they are doing, we can start. No, right? No, then you can't give that as an answer. You don't have an option like that. So in the exam, if it was the exam, what would have been the one you pick? Assuming there is no tick.
Answer. All the course one to that.
Then 20,740. Abdullah? Rufina? 20,594. Isha? Go with C. Okay. Imat? What is the trouble? Trouble is next to you. Okay. Basil got 14,154. Altaf got 13,800. Let's see. Okay. So they are asking for the land. On 3rd August 2023, William sold 2 hectares of land for 92,000 pounds. William's father, okay, let's put the numbers while reading, that will save us time. Disposal proceeds, how much was the value? Chan? 92. William's father had originally purchased the land for 19,500. Okay. Yeah. Cost is 19,500, right? Father died on 17th June 2018 and the land was inherited to William. On that date, the 3-hectare land was valued at 28,600. So then what should be the cost we should consider? 28,600, right? Inherited value 28,600. So we need to consider that, it seems now. William incurred legal fees of 500 for defending his title for the 3 hectares of land. Can we consider that? No. We can. 500 legal fees.
You have to consider.
We have to consider because objective is to defend the title. So if it is defend the title, we can consider that. Correct? So legal fee, I am taking that is 500. So the total would be
So
29,100.
shouldn't be approaching 500.
We'll come to that. Cost also the full one I took. No? Then the market value of the unsold land was 38. Market value of unsold 38. So the total market value is how much then? Correct? Then the portion cost would be 29,100 divided by 130 into 92, right? Correct? How much is the value? This would be the answer. Correct?
So legal fees. There are situations where legal fees can't be available.
The generic legal fee you can't take here, but this is for the purpose of defending your title, ownership. But this is specifically given in the Finance Act that if you are defending your title, that should be a part of your cost. This was specifically given the TUT also. So overall cost was 19,500, agree. But this is incurred by father, not the son. Son is getting it as an inheritance. So when the son getting inherited, we have done in the TUT, we have to take the market value as of the date of the death, which is 28,600. After the transfer, son is incurring 500 to defend the title. That also should be added. That also we discussed on the TUT. So 28,600 plus 500 means overall cost becomes 29,100. Unsold 1 hectare, right? That's market value is 38,000. So that means overall market value would be 92,000 plus 38,000, which is going to be 130,000. Then the total cost of 29,100 I have to split. So the total market value 130 I divided by that, multiplied by the disposal process, which is 92,000. So the cost that I have to use would be 20,594. Yeah, father's cost is not relevant because son did not spend the cost. No, son got it as an inheritance. Then 19,500. Yes, because interspouse transfers are on no gain, no loss basis. Yeah, if it was wife, then 19,500. Correct?
Suppose if someone wanted, but as a gift they transfer means that on that day market value will be there.
Yes. Yeah, okay. For that also we have a question, I think, in this paper. Yes, Imad, you were also about to ask something.
So that total market value, like how
92,000 plus 38,000. Sure.
Yeah.
The others, are we okay? Any further questions on this one? No? Right. Then let's move on. Yes. Chan's favorite. Literally. What is the amount of private residence relief available on the disposal of house by William? Can you guys quickly do that? Let's see. The others quickly try this. Okay, I got one answer from online as well, 462,825. Sean, same. If I take somewhere else, is same answer. Good. It will be a problem for you. If the time you spend in the class is genuine, without assuming you are giving the numbers, then should be able to manage.
Sure, got it. 460 to 825. No, actually.
If I take somewhere else,
No.
still the same answer.
Sorry.
Why? Guys, there is only one way to keep Shan quiet, no?
What?
Oh yeah, compared to other days.
But your question can like obviously you're going to say yes, but then ERR and rollover relief both
Because PRR is for non-business assets, ROR for business assets.
job related.
Accommodation
Yeah,
with
ERR is for so ROR is for business asset. ERR is for
non-business. Done? What's the answer? Okay. What is the answer? What's the answer? What's the answer? You want to check? Yeah, I don't bother Fadil too much. Okay, shall we start discussing then? Ishak, what the answer you got? Sorry? That's fine, what's the answer? 463,540. Okay. All right, guys, let's focus on this one now. Fadil, let's focus. On 12th October 2023, William sold a house for 840,000 pounds, which he owned individually. The house has been purchased on 12th December 2008 for 222,900 pounds. Okay, so let's put the cost and the disposal proceeds. So the disposal proceeds is how much? Next. Cost. This one. This should be the gain, right? The gap between these two. How much is that? 617. 100. Okay. Throughout the period of ownership, William and his wife Jane occupied the house as their main residence. So that means full occupancy has happened. But one corner of the house was always used exclusively for business purposes by the couple. Then for that half, that part, can you claim PRR? No, right? So the gain is this much, but out of this divided by 4 into 3 only you can claim for PRR then, because 1/4 is not claimable. How much is that? Sorry? Then this should be the answer, right? Agree? All okay? Right. Without going to Excel, I'm using the board. Excel is very easy for me. I'm going for the board so that it will be more clear to explain rather than just showing the formulas in the Excel. So get the use of that. Huh? For me, Excel is pretty damn easy. The answer is there. I can just show it to you and go ahead. Correct? We okay? Yep. Wait, it'll be there. I'm pretty sure they will not just speak about wife for fun. Wife should come into the picture someplace. This is okay? Sorry? Yeah. That is for inheritance. This is CGT. You okay? Sure? Right. Okay, so let's check the next question. Fadil? This is something that you are asking for. Carefully select the answer here. This is what Fadil wanted. Then don't put it, just pick the right answer. I also hate it. What to do? I have to teach, you have to learn. No, it's like this, no. Irrespective of whether we hate it, I have to teach, you have to learn. What to do? I also hate tax admin. What to do? I have to teach, no. This is not a straightforward one. So carefully select the answers. fact of life, then we are going to the exam, we never listen to the today on the whole fact one reason which is very what thing if you already know, then I think that is the exact reason you told me. That is you try to take the best. But and I can try to do that. You just give it. That's why I was only things to do. Because I know this guy and you ask how much he can do, but he's not used to that person. No. But still, you can do a good job. He takes time to understand. Not you. You just need to read first. If you read, then you can take it. Yeah, you know, that problem is whatever we think, no, your problem is the juggling with other activities. If you take you can you I can do the exam. Uncountable times I have fallen sick when it's goes to the exam. Or else you have to be very close with your employer. That also works well for me. It depends on the way you tackle the fellow. Then it's a problem. Then it's a different problem, no man. Then it's a different problem. That I agree. But to tackle that, there's a different thing. I also had a
Go the wrong way.
no. I also had a female boss. Sometimes back, I was also had a female boss. So I never got the promotion. When she was my boss, I didn't get the promotion. So two incidents were there. One, I usually go to the office at around 7 a.m. One day I got late. Okay. One day I got late. Then she started a big fuss. Like some people think that you should come on time. The things started. So first day, I kept silent. Second day again started. Now she has to defend why I'm not getting the promotion. So started saying some feel that they should get the promotion. Sometimes I also feel, but even though we speak, it doesn't work. This whole dialogue came up. So I knew this for me only. I listened to the entire thing. I was like, okay, look here. If some person, some no, she's not saying my name, she's saying some. I was like, if some person is doing some mistake, or if there are some problems with that person, as a manager, it's your responsibility to tell to face of that person, look here, you are not getting this because you are not doing it this way. Then only that fellow will improve. No? you tell me that person doesn't know, so he will not improve. So whoever you have a problem, tell to the face of that person. Then this dialogue went to my director's ears. And he got me to an interview. Obviously, we had a nice clash, a super clash. But after 2 days, I got promoted. Usually, when I have a clash, it works positively for me. Okay, this one. Okay, let's try to figure out the answer. William's brother Luke, that name is always given for troublemakers, has told William it would have been better to have transferred 50% of the ownership of the house to Jane prior to its disposal. Which two of the following statements are correct? So first of all, let's read about Jane. For the tax year, William is a higher rate taxpayer. Okay, so that means William doesn't have any unused amount from his basic rate band. So whatever he gets as a gain here will be taxed at 28%. Agree? For the tax year, Jane had a taxable income of 21,440. That means Jane has a remaining value from her basic rate band. And she has made a chargeable gain of 6,000 on another residential property. That is fine, right? Because she has AEA to set off that 6,000. So we don't have problem with that 6,000. Agree? So we cannot take any advantage of Jane's AEA, but her remaining basic rate band we can use. Agree? Clear? Having that in mind, let's read the options they have given. First option, the transfer to Jane would have been at nil. That means no gain, no loss basis. Yes, that is correct, right? So nothing to argue on that. Straight away, that is correct. So A we take. B, private residence relief available would not have been available in relation to Jane's gain on the disposal of the house. No, no problem in that. She also can claim PRR. Because for PRR, we are talking whether it's your main residence or not. We are not talking about whether you jointly owned or you individually own. No, that doesn't have a relationship for PRR. Correct? So second one is wrong. Third one, the amount of capital gains tax that would have been saved is 4,553. We don't know that. We have to calculate and see. Fourth one, the amount of capital gains tax that would have been saved is 1,626. Let's calculate and see. Only benefit we can get from jail, according to this question, would be transfer to her and get the advantage of her basic rate band, right? So the technical basic rate band is 37,700. How much is taxable income? 21,440. So this amount we cannot use. No. The remainder is how much? Yes or no? This needs to be multiplied by. So if this was kept with, what's the name of the gent? No, the gent.
Gentleman is William.
William. So if we keep it with William, that will be exposed to 28%, right? This 16,260 also will be exposed to 28%. But if he transfer to Jane, this amount will be exposed to 18% only. So he is saving 10% tax. Correct? So 16,260 into 10% means 1,626, right? Correct?
Yeah.
Why do we not use? Simple. So D is the correct other one, right? The tax savings would be 1,626. Agree? It's a house. That's why we claim for PRR as well. Correct? So it's simple. FHA is, yeah, even, but 18 and 28. But PRR will not be there for FHA because you are renting out, you are not staying there. No? Yes, madam.
Other charge
Hmm.
share the 6,000.
Hmm.
That will also be within the.
If this was above 6,000, yes. Then you have to take it out from 37,700 as well. AE is there. No? So 6,000 will cover up that AE. Yes. First of all, we should have considered that. Are we okay? Any further questions? All good? Right. So Fadil, you found the shortcut now? Great. So generally always there are shortcuts. Okay, last question on this particular scenario. What is the chargeable gain arising on disposal of the warehouse by Luke in December 2023, assuming all available reliefs are claimed? Which should be the first, AEA or remaining BRB. In this case, AEA is not there because she has another 6,000 chargeable gain. So AEA is out. If both were there, AEA first because that saves you the entire 28%. No tax at all, no AEA. Quickly try this one also. Don't worry. Hmm? Sorry? Very straightforward. Straightforward max.
Yeah, gain from warehouse plus.
Okay,
gain
good.
from-
Yeah, let me see. Yeah, but wow.
Okay, it's done.
Right. There was nothing disposable. Okay. Then, yeah, then, I know it's straightforward. Sihat got 64,085. Arshad got 39,002. No, total 70,085. Okay. Altaf got 70,085. Fadil also got 70,085. Let's wait for the others as well. Hmm?
The trick is, this could be, like rollover link for replacement assets. That's why it's coming, right? We have to take the gain and minus from the cost and then. Total gain is 70,000.
Yeah, Arundhati also got 70,085. Okay.
Gain, okay, total about 70,000.
The game is
So October 12 he has sold the asset and gain, taking gain 20.
okay.
Done. What's the answer? 70,085. Okay, Midhu.
Sir,
Until we discuss the question from next turn onwards, we have to apply in some plasters to Fadil. Right.
Chargeable gain arising in the disposal of their house.
And after that, they are specifically also saying, after considering all the available reliefs are claimed.
So the rollover relief is coming from that to here.
So let's read first.
So is there a time period like a limit where the rollover relief can be claimed? Like if it's more than this.
To notification, you have, yeah, we have.
There-
I was about to say.
there-
Adit?
6 years.
No, not 6 years.
That is
That is also.
3 years forward, 1 year back.
4 years in total, yeah, yes.
3 years forward, 1 year back. So altogether 4. Okay. These you should have in your fingertips now. So I have a what do you call it, reverse answer for you. Imad, I have a reverse answer for you. So you told that only day after tomorrow exam. Then the reverse answer is they should be anyway in your fingertips by now then. Okay, Sam, you don't worry about that. For you, it's hard to keep in fingertips, I know. Keeping fingertips itself is hard no for you. Okay, coming back to Luke. Luke has done following disposals. On October 2012, Luke sold a factory for 230,574 and realized a gain of 31,083 pounds. In May 2013, he bought a warehouse for 231,211. That means what? You can consider the ROR, right? You sold and brought within a period of 1 year. You can go forward up until 3 years. Correct? So ROR is done. Can claim. Plus partial ROR also doesn't come into the picture because disposal proceeds is less than the investment amount on the new warehouse. So full ROR also you can claim. Correct? He then sold the warehouse in December for December 2023 for 270,213. So we need to calculate the chargeable gain. Okay. So how do we do that? Yes. Full amount is reinvested. Yes, Fadil. How to calculate? Okay. Right.
1 minus 31,000.
Yes. Let's do it.
70 minus.
Wait. Let's write. So we have the cost of the cost of the replaced asset. How much? 231. Right. Then ROR we can claim, right? The gain we had from the previous disposal. How much is that? Great. By this amount, the cost will come down. How much is that? This is the base cost, isn't it? Then what is the new disposal proceed? Yes, sir. Then how much is the gain? Hmm? Which one? But if a chargeable loss comes, do you need to roll over? What is the objective of rolling over a loss? Why we rolled over the gain is to defer the tax payment. The loss, as a taxpayer, you would love to take it as soon as possible, right? That's the point of deferring the gain, loss. Until Shan thinks that, Ishak, yes, what is your question? Yeah. Get that gain, and if you add 3183 for that, you get the same answer. That can be used as a shortcut for section A and B, but C, you need to do this calculation. Because C, you get marks for workings. A and B, you can do in the way that you did. It's a shortcut. Shan?
So you're saying like if there is a loss in the first one, we can get accident.
No, he is asking whether we can do that. I'm saying no point of deferring a loss, right? Rather than trying to get the benefit immediately. Gain, yes, you can defer.
But it takes
At what?
Because you have
Hmm.
a source identity to the replacement.
So that is not to figure out the base cost. If you have a brought forward loss, like he said, you might have claimed that brought forward loss from the current gain. If there is any brought forward loss, you would have claimed that brought forward loss. Now you got a gain from 70,085 here. No? Let's say there was another asset which you have sold at a loss, and that loss is remaining. That's fine. Let's say you sell some asset. You sell two assets in two different years. First one has a loss. Second one has a gain in future. So then you can bring forward the gain you had in the past and reduce the current gain, right? That could have been the one you are talking about. Last year you sold asset, which gave you a loss. Right now you can't do anything about that. No? This year you sell another asset that gives you a gain. Then without paying the tax for that gain, you can set off that gain against the loss you had in last year. Correct? That would have been the case that you're speaking about. So cannot get depreciated asset and defer the gain 81,083. Yes, you can do that as well. It's a depreciating asset. You can go ahead with that method as well, but either way, it gives the same answer. Even if you consider this as a depreciating asset, since the time gap is less than 10 years, you will get the same answer. Alfred, Sihat, are we okay? Only few got the evening slot. We didn't have evening slots because the slots were over. We had to reopen for the afternoon. That was on the last moment. There was no assurance. There was no assurance that evening slot will open or not. It's fine. I know that. Even for the class, you come on time, so we know you are a very morning person. Right? Continue or you want to break?
And start section 3.
Right. Okay. Moving on to the next question then. What penalties will Kilimanjaro, okay, Limited, be liable for late 31st March 2024 VAT return? Okay, so there seems to be a delayed in VAT return. Do we need to pay any penalty or not? And what is the penalty point? For this, I shared a technical article with y'all and asked you guys to go through Did you guys read? Huh? Read? Good. So there are around 15 technical articles out. No, it was technical article. There were around 15 technical articles in your site. Out of that, I shared only one. So do you really think I share that for fun and ask you to read after so many articles are there, specifying one article and asking you to read? You can read those 15, but this one is important. What is it? No, two for one. Out of two also, I shared only one for you all. And still you guys didn't bother to read that, is it? You open. Good boy. At least open. Good. Guys, why I shared that was there was a small change on VAT penalty system. That is why I shared that with you guys and asked you all to read. Okay. Now, lucky yes, none of you read that, isn't it? Only few read, they reverted to me saying, we read, we understood. And you guys are my favorite students. Don't
I
care.
read it. So the web thing.
Yeah, you read it. Great, then tell the answer for this one. Then you know the answer for
But
this.
still, I-
So, guys, after having so much, I share one means that should be important. No one thought like that? No? You thought? Still you didn't take an action for it.
Break out.
Sorry? Long. Longer than your study text. Yes. So, yes, Altaf, I agree with you. Yes. Okay. Okay. Okay.
And within 1 month.
Now, the penalty starts when you reach 3 or 4 penalty points. Just because you have one penalty point, you don't need to pay penalty anymore. Now the penalty starts from 4th penalty point for VAT. Clear? Point is clear? Since you guys read the article, I'm just dictating it once more. Okay? Guys, at least now you can listen if you didn't bother to read. Good. Now in that, we start charging penalty only after reaching 4 penalty points. That is clear? That is the main difference that we are talking on that article. That is also clear. So that means within a period, you should have done 4 offenses, 4 penalty driven offenses. Then only we start charging you penalty. Clear? In this one, you have only 3 penalty points, isn't it? 29 days delay, 10 days delay. This is the 15 days delay is the third point. Correct? You need one more penalty point to start charging penalties. Fourth one, 200 pounds. Yeah. Yeah. But this change was driven through the article. That's why I shared the article. So, guys, If I share something, I'm not sharing that for fun. But it's still there. Good boy. After the exam, please read it. Huh? Others, after the exam, you can open. Isha can read after the exam, others open after the exam. Guys, I mean, if I share something, just read that. I generally don't ask you guys to read, right? I asked you to read only three things, no? Tax admin. What the invoice part I asked you to read, what are the things that should be included in an invoice? That is less than half a page. Yes, that was less than half a page. Then I gave only this article for you all to read, isn't it? Everything else I read for you all. I like that. Admin, yes, I agree, but no, that I like it. That I like to teach, not to do in practice. I hate that. So please read that article today because might be testable, guys. I'm not saying compulsory, Kela, but there's a possibility. We're good? For this question, I hope you understood the answer. By now, the third one is the answer because we are still at the third penalty point, 3 delays. So up until we go for the fourth one, there will not be any penalty. So third one, third penalty point, and no penalty would be the answer. Are we good? Clear? Any further questions on that? Starting from 200. Any questions? Right. Can I move on then? Yes, Father. Anything?
Last answer PC was 0.
Sorry?
From last answer, previous one, we have put
Yeah. Obvious. So he already gave the answer for this one. So what they are asking is, do you recommend to read the rest of the 14 articles as well? Right now, no, because right now you don't have the time to go through all 14 articles. So that, please go through that. The rest, anyway, we have covered in the class and with the questions as well. Just that one focus a bit. There are 2 articles. At least focused on the one that I shared with you all. Okay? Other articles, I don't think we have enough time to read now. Now practice the questions for the rest of the time. Only that article, please go through. Okay? Abdullah? Okay? What is okay? Were we discussing about that? Huh? What were we discussing? You too, one more time. This fellow will be studying from here. Today is the last day, guys. Today I need the focus. Okay? Right. So the question is, click on the relevant boxes below to identify the late payment penalties that will arise on 31st March 2023 and 30th September 2023 VAT returns. He is right. Previous one itself we discussed. You need 4 penalty points to have a penalty. Then obviously it should be 0. We're good. Okay. Now we are talking about order of goods, a tax point. Read that and tell me the tax point. How?
Earliest of invoice date and
And the delivery.
okay.
Okay. Easy.
Sir,
Sorry? Carry the loss. You have to carry forward until you have a gain to set off, right? Correct? Now, Shay, be careful with the words. That is where they are playing with you.
It will be adapted.
1 minute. Okay, fit with. Will it fit? You try and see. Yes, Shan, you continue. Yours will fit. Try this. Okay, then shall we proceed with this question? Okay, so order of goods. Kilimanjaro Limited received an order for goods on 20th October. So for that point, do we need to consider the order date? We don't consider the something, okay? Earliest of something and something and something. Order we don't consider. So that is out. 20th October, no need to consider. Goods were delivered to the customer, need to consider. Invoice sent date, need to consider. Payment date, need to consider. But we are doing the what do you call delivery on 20th December. So that would be the starting point. So second one or 20th December 2023 would be the point for us to start. Good? Right. Okay, I got a question. In the study planner that PBIM has shared, there were certain questions that you need to practice, kind of a thing. So are they important or not? Right now, it's a question mark because that was a 30-day plan. I prepared that for 30 days. So right now, trying to follow that would be a bit of a hard thing to do. But the importance also should have been given in that one, because when I gave the importance, whether it is high or low or medium or whatever. So depending on the risk rating I have given, you can decide whether it's very important or not. For those I have given the risk rating, high, low, and medium. Right. Next one. How much input VAT was Kilimanjaro Limited able to recover in respect of the irrecoverable debt in its VAT return for the quarter to 31st March 2024? I think most of y'all have already done the answer. So let's quickly discuss without wasting the time. So during May 2024, Kilimanjaro Limited discovers that a number of errors had been made when completing the VAT return. 31st of March 2024, Kilimanjaro Limited wrote off two irrecoverable debts in its VAT account. First, £800, that inclusive, was due for payment on 1st June 2023, and despite being a long chased, still not being paid. Second, £1,000, that inclusive, relates to a company that Kilimanjaro Limited has recently been informed that gone into liquidation. The debt was due to be paid on 1st December. So what are the criteria? Minimum 6 months should have been elapsed from the date of due. So first one, 6 months elapsed. Second one, still 6 months has not elapsed. So for the first one, yes, you can get the claim. The given figure is VAT inclusive, so 800 divided by 6 simply will give you the answer, correct? That is 133. Agree? Right. Then can I move on to the next one? Can't wait. Yes. Okay, last one in section B. Which two of the following statements are correct regarding the errors which have been made? You don't need to read the error. You can just go through the options and decide. First one, if the net error is less than 10,000 or 1% of the turnover 60,000, up to 60,000, the corrections may be made in the next VAT return. Did we have something like that? No, right? Right. Then that is wrong. Okay. Second one, errors exceeding the de minimis limit must be separately notified to HM Revenues and Customs as soon as practicable. We discussed something like that, right? Then that should be correct. Right. Third one, the maximum additional penalty that can arise as a result of an error is 100% of the VAT loss due to the error. Yes, right? You can't go beyond 100% for VAT. So maximum would be 100%. So third one is also correct. Fourth one, as a company has not attempted to conceal the error and has apparently made a voluntary unprompted disclosure, the penalty will not exceed 20% of the loss tax and may be waived altogether. That is also not correct, right? Yeah. Yes, in this, I didn't read the scenario, but generally it's hard to waive off, but you can reduce. But that's totally up to HMRC. So section B is done. Are we okay? Sure. Then you guys wanted a break after this, no? How long? Half an hour. We'll check with the girl. You're leaving anyway. Then you guys are safe. Decide. 10 to 15 minutes. Okay, I'll go with Imad. 10 minutes. Okay, half an hour max. Be back in half an hour. All the you want to have shower also. Wow.
What was it?
Guys, half an hour. So by it's 2:06 now. 2:36 you should be here. I am late. No? I'm wondering. Chef, contact. Okay, shall anyone busy? Okay. Okay, now we are moving on to section C. Let's do one by one. So this one I also didn't do the Excel anyway. We will walk through with the examiner's answer itself. So first question, always read the requirement first. Determine if there will be an overall saving of tax for the tax year ended 5th April 2024 if John purchased the property via a limited company rather than purchasing it personally. Your answer should include a calculation of John's income tax liability if he purchased the property personally and if he purchased it via a limited company. You should ignore national insurance contributions. So they are clearly saying, forget about NIC and do the calculation. We're good? Right. So quickly give it a try then.
So in situations like this, first, but most of the examples what I have seen, they will give answer via limited company and then they do it personally and only. But give you a try.
Same. That is the easy way.
First they do for this, then they do for that, then they
Compare. Because that will be saving your time and less margin for error. Right. Overall. After Yeah, praying for the God, is it? Okay, total savings amount I got as 16,890 from one Arshad, from Arundhati 2,721. Okay. Fadil. Waiting for Fadil. Okay, I got him on WhatsApp. Shall we start? The is not finished still. Today, both of these fellows are trying to kill me. That's common thing. Let's see. Okay, since you guys are confident, let's see what is their answer. Wait, let's go. I'm trying to figure out the answer. Okay, shall we try? Let's see. We will do first. I'm also opening this for the first time. Wait. Let's do it first and see. What? What did you do then? You did something. You're also not sure what you did. No, you have to do the whole one. Otherwise, how can you advise on the income tax part? How can you advise about the income tax part if you don't do fully? Because based on the slabs and all, everything will change, right? Correct? Okay, let's walk through, guys. On 6th April 2023, John will purchase a residential freehold property, which he will rent out. However, John is unsure to purchase the property personally or via a limited liability company. Limited company would be incorporated for the sole purpose of purchasing the letting out property, and John would hold all the shares of the company. Regardless of whether the Vaisha,
So he tried to
regardless of whether the property is purchased personally or via limited liability company, the property will be let out throughout the year ended 5th April 2024 at a monthly rent of 3,600. So what will happen to the rent then? That's it. Okay, right. So from the company's point of view, where is company? They have the company, right?
So one.
Okay, what is your question?
The other expenditure that they have not specified anything against.
Wait, we are still on first adjustment. So if you go as a company, what will happen? Sorry, individual, what will happen? No, no, I'm asking a property income, what are you going to do? 37,000 into it?
3,000.
Okay, what is the answer there? Okay, so we have taken that under the individual law. That we agree, right? If you are a company, what will happen?
Sorry, 43 to 1. I.
Right, so I'm taking care that. Through they are working. Right, if it is a company, what will happen? Hmm? Already? How? Already included in that. Okay, all right, let's see. Okay, let's read the full question then. The purchase of a property will be partly financed by a repayment mortgage. Mortgage interest will be 15,000 paid during the year ended 15th April 2024. Okay, this is okay. So what did you do for this mortgage interest? Right. If it is a company, you can deduct it from your this is relevant for business. So according to this business, it is a renting out thing. No? So then you can deduct it from your trading income itself. So property income. Yeah. Okay. Other expenditure on the property for the year ended 5th April will amount to 5,600. And okay, they are saying it's allowable, then you can deduct it.
But this is
Let's see.
they didn't say so like they can use this 5,000 when we are doing buying through limited company also.
Why not? If it is allowable, it's allowable, right? Oh, yeah, okay.
Yes.
Right. Guys. Employment income 70,650. That will remain as it is, whether you are a company or individual, because your individual component will run even if you are going as a company, right? Correct. Your salary is not going to change, no. Even if you purchase the property as a company, Still your employment will continue with your existing employer. No? So that is not going to change anything. Agree? If the property purchased by a limited company, then the company's corporation tax liability for the year ended. Okay, they have given the corporation tax liability straight away. Okay. John will withdraw dividends from the company totaling to 7,000. John will not have. Why are you giving 9 marks for this? It's a big question. Why they give 9 marks for this? True. Yes. Then what we done? I mean, how many? Hmm, hmm. Okay. Yeah.
Buy from the company. If we buy person.
Yeah.
Yeah. Property income
No, individual wise, your entire tax slabs might change, right? Income tax එක නෙවෙයි බං ඊයේ තියෙන්නේ employment income.
Employment income.
Okay. Hmm. Hmm.
So,
What? What has it done?
he was talking additional. Yes, no, this is high rate of years tax rate additional 45. But now he's talking. I'm saying.
No, I get your point, but the risk is if you cross the tax bands in that kind of a situation, you might lose entire marks. Shortcut can be used certain cases. Certain cases you have to be very careful. We are okay? Right. So if I use the long method for individual calculation, first of all, if we purchase as an individual, so 70,650 is not going to change, no. His income, or do you call it, employment income. Only thing, a property income will come into the picture. So property, he will have a rental income of 43,200. Then expense you can deduct. Sorry, mortgage is not allowable because if it is an individual, the interest will go for the income tax liability, right? 20% of the interest. Yes. So mortgage I'm disallowing. So your property income will be 37,600. That I add to your employment income. Now your net income becomes 108,250. Personal allowance can be claimed, but you have, yes, you have to go for the adjusted. Yeah, so 8,250 is excess. That into 50% would be 4,000 something. How much is that? 4,125.
Yeah.
Right. So 12,570 minus that would be 8,445. Then your taxable income would be 99,805. So Shan, if you do only the what do you call property income adjustment, this personal income benefit also you would have missed. Now you see the reason? Right. Then you know the taxable income. Then it's just a matter of applying the respective rates. 37,700 into 20. The gap. Exactly. That into 40. Then from that you can deduct the mortgage interest, 20% of the mortgage interest. That also they have deducted. Then if you only operate as an individual, your liability is going to be 29,382. That is agree? Right. So if we operate as a company, then what will happen? His employment income will be sustained. No? That will be as it is. Agree? He will get a dividend, right? Okay, what are they done here? Okay, dividend 7,000 we are getting. Apart from that, now you don't have the property income for you, right? That goes to the company. So you don't get the property income for yourself. Correct? That goes to your company. So what you get is the dividend that you are getting from the company. So that 7,000 we took. Correct? Dividend income comes under.
So the income goes to the company, not to the person.
He's confused with why did we have dividend for first one. They are saying that purchase that asset only is opening the company.
Yeah. So according to this question, the company is formed for the purpose of purchase this property and rent it out. So if you individually go and purchase the building, then you don't need the company to open itself, isn't it? Yes. We are okay? Clear? Right. So you got the dividend, we took that. So we are going to a total income of 77,650. Up to that also we are good. Right. Then now you can claim the full personal allowance. So we claim for that as well. Then from your taxable part, 58,080 will be under the non-savings. 7,000 will be under the dividend. 65,080 will be under the total. Agree? That is also fine. Right. Then I just need to apply the rates. For non-savings income, 37,700 at 20%, and the gap at 40%. Then the dividend, 1,000 will go under the nil rate band anyway. The balance 6,000 will go under the higher rate band. So altogether, income tax wise, you are paying 17,717 if you purchase as a company. Correct? Right. What is the exact requirement?
The overall
Tax
tax.
savings, so we have to get the difference.
Not just here then. No, what you have to do is, yes, you need to add the corporation tax as well, because if you purchase as a company, you have the corporation tax coming into the picture, which they have already given in the question. Correct? Good point. So if you purchase personally, this is your income tax, which we calculated. If you purchase as a company, this is your income tax, this is your corporation tax. Correct? Requirement is if you purchase as a company or if you purchase as an individual, what is your tax savings? Both. So if you purchase as a company, you have two taxes, income tax and corporation tax both. If you purchase as an individual, you have only income tax. We are good? So overall, if you purchase as a limited liability company, it seems to be you are saving 7,371 on overall tax aspect without NIC, because we did not consider NIC. Agree? We are all good? Up. Got it? Working. Which working?
Zoom out meeting.
You are working. Okay.
Okay. Shortcut is,
Okay.
but something.
But you understood what needs to be done?
That's why I'm thinking why.
Don't worry, things will happen. You okay?
40% got the main.
So can the mm-hmm. No, for you, the problem is, Shan, when you go for the shortcut, you might miss this one.
Oh no.
Personal loss impact.
Personal loss use the personal loss reduction fine. People not pay that.
No, the thing is, Shan, shortcut is not bad, but this kind of a one, better to, I mean, they're giving 9 marks also, right? We should present something for 9 marks. There was nothing to do in this one.
Yeah, your corporation.
Yeah, see, corporation tax is also given. So nothing to calculate basically. It should be around 4 to 5 marks max. I is too much. Okay. This one, the property seems to be a residential property. No? That is why we took it. If it is a non-residential property, you can deduct. Yeah. Deduct.
In this, that they give no other expenditure on property will be 5,600. First part, okay, he has to take it because he's purchasing it personally. But in second one, since it's company, it doesn't affect him, so we don't deduct that allowance.
No, that would have been included in the corporation tax computation.
Yeah.
The 4,000 figure that they are giving. So whatever relevant for property, they should have considered there itself. No,
Company not but here is
no. Property expense should have been incurred by the company, and if it is purchased by the company, then in the corporation tax calculation, they should have deducted 5,600. We're good? If it is a residential property, yes. Normal one. No, residential one, same effect in the sense. What do you mean the same effect? Both in the sense. What is here, what is there? Yeah. There in the sense where? Top pair deduct. Down. So,
found out that.
wait, I'll come to that. I was checking his query. So, if it is a okay, guys, listen. So, Fadil, I got few queries about this mortgage interest, so I'm explaining once more. So, when you go for this whole interest on properties, there can be 3 scenarios: residential property, non-residential property, and FHA. So if it is residential property, from property income, we don't minus anything. Instead, from your income tax liability, we deduct 20% of the interest. That is clear? That is fine either way. Both are tax reducers too. No issues. So non-residential property and FHA, same treatment. We deduct it from the property income. You're good?
One residential property and
FHA, very solid accommodation. So in a nutshell, this is the treatment for interest. This is for individual. For a company, what will happen? If it is a company, two situations can be there. business, non-business. If it is business purpose, deduct it from your trading income. No, business trading income. Non-business, you have to deduct it from your interest income. If it is non-business, we don't allow you to deduct it from your business income or the trading income. You have to deduct it against your interest income. Sorry? No, not 20% here. You have your property income or whatever. In this one, 43,200 something. Straight away deduct from there. That's it. No, full amount. Yeah, because the logic is here, Isha. If you are deducting against this, your income tax figure is after applying the percentages. If you are deducting against here, you haven't applied any percentage. Yeah? We're good? Right.
So the whole interest, everywhere we are taking the full amount, only 20% is taken.
Residential property.
Everywhere else we are taking the full.
We're okay? Good? Right. Sihat, I think you're also okay with this now, right? Mortgage interest? What if it's not a letting company? Then how to pay the mortgage for that also I have explained now. I think that is also okay now, Basil, right? Okay, so first half of this question, are we okay? Now you should know by now there are two questions from this one. First, it gives only 9 marks. So you know 10 marks should be here. So that means for 1 mark, something they might be asking. Second one, at the top itself, on the top of scenario, they say this is applicable for 2 requirements. So we did only 1 requirement, so something else also should be there. Agree? Let's see what is there something else. Explain one way in which the calculation of future taxable gain on a property disposal made by a limited company would differ from the calculation of taxable gain on a disposal made personally by John. AEA and indexation. If it is a company, they're asking, they are not mentioning about any specific year, no.
Yeah.
No, are they asking about this scenario here?
By John.
They are asking, are they even, I mean, what they are asking is in future, if he disposes, yeah. How do you know 2017 will be constant? Indexation allowance will be constant. Year will change, no? Agree, but do you know, are we asking within our syllabus? Yes.
So you are saying the only difference is the end.
That is one answer. You don't know it. Correct? So mainly this one. No, there can be other way. I mean, for John, if we relate to only to this scenario, no. But in general, if you take, there can be other reasons as well. Like you purchased a building and a business purchased a building. Business doesn't use it. Non-business also they are not using it. Then it will be investment property, no. Still, it is within the business. So certain release they could have been claimed. But individually, if you took the release wise, you cannot claim anything. Correct? There can be certain other reasons as well. In this case, it is mainly around AEA and indexation allowance. Let's see how they have write it. That is easy, no? If they have wrote, let's see whether they have wrote it. What? But I don't agree with that comment. No, what is the logic of indexation allowance? Why we are sticking to 2017 December? AEA is the main reason. That's why they have bold it. Write it when. 2 seconds to write it. Annual exemption amount. You have to remember, no. You can't use shortcuts for an explanation answers. No, the thing is, Shan, now let's say you are explaining to someone who doesn't know tax. That person also should be able to understand what you are trying to say, you know. So your explanation should be in such a way where a person who cannot, who doesn't know tax also should be able to understand the basic concept of your answer. Now, let's say you are referring a research project of a tech fellow, and everywhere he used tech jargons, the shortcut versions. Will you understand anything from that? Got the logic? Right. For this one, I will tell you the reason why I don't agree with this. We are talking about the future. What is the assurance 2017 December will be fixed? That should change in future, right? Because right now we are sticking because from that day onwards there was no major inflation. But what if inflation situation changes? Correct? So either we should not comment on indexation, we stick to AEA. That is the easiest way. Not commenting on indexation, that is the easiest thing. Because this one can change at any point. You don't know even the current finance act, whether it is changed or not, you don't know. Even I don't know. I didn't read that. To that extent, I also didn't read the current finance act.
Suppose even if they given answer like this, they will accept it.
Their answer is the top part. The other thing is just an explanation about indexation.
Suddenly only remember the indexation, we forgot about this analytics, but then we are gonna write, no, it will not be, because after 2017 it's not applicable. So that they will consider that.
No, then it doesn't make an impact, no. According to what you are saying, if indexation is not there, indexation will not cause a difference between corporation and the individual tax, right? The difference will come if you can deduct indexation, isn't it? Agree? Right now, as a individual, because you have AEA for individual, for company, you don't have AEA. On the other hand, if we think their question is only about the gain, but if you think about the tax liability also, there can be rate benefits as well. Agree? Right now, this question don't mention about the rates because they're asking about the gain only. So gain will be impacted mainly by AEA. Correct? Because indexation, right now, no impact. Future, we don't know. Correct? But on the other hand, if you take what you called, if the question is slightly changed and we move on to the CGT payable itself, then you have a rate benefit also if you are going as an individual. Because individual goes to the CGT rates, no? Correct? So you might go under 18 or 28. Corporate, depending on your tax level, you might go up to 25%. Because you don't have any 18% benefit in the corporate. Correct? Huh? Stuck where? He used what from? Good luck. I told that in the class, don't do that. It's his fault. No, I didn't ask him to sleep in the class. I told that in the class. No, now nothing will work. You will have to close and reopen. Right. Can we move on to the next question?
Yes.
Why? Okay, now I also have a problem. It's not moving.
The other side also you go down, and then right side also you go down.
I did that. And now it's working. 15 mark, one question, income tax liability. I told you that at the beginning itself, no? Voting. Who wants to do alone? Who want to do alone? Okay, so all are voting for that, so you're right. We have one more hour to finish, so quickly do this, sir. By around 5:30, we need to wind up. Otherwise, I will be wind up. Then you know the reason. No?
What? Say 250 zero. So less than 250 zero. So that's very immediate also is zero. Yeah. But that's all. But 30, 30, 75. Limit into 2.2. Is it? Account is
business used to be tax illegal. also doing that. Because in the salary, அது சரி 6/80 12%
இல்ல
இதுக்காக தானே கேட்டேன்.
இல்ல 6% தானே that is deductible from the taxable income. So 8% is paid per it will extend your rent.
அப்படியா?
Oh, what's up?
அதுக்கு எடுத்து விட்டுருந்தாரு. ஃபர்ஸ்ட் தானே இருக்குது. ஃபர்ஸ்ட் தான் இருக்குது.
இல்ல 6% மட்டும் தான் இருக்குது. It's basic. The people use working occupational pension scheme, still it's more than 120. It- 150 they didn't say net or gross.
No, sir.
So it's ஆனா சார் சொல்லிக்கிற வந்து இல்ல சார் சொல்லிக்கிற அப்படி அப்படி
தரலாட்டி நெட்டே பார்த்து நான் cross
இல்ல 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 இப்படி தந்திருந்தா gross தான்.
cross தான்.
ஏன்னா சும்மா நெட்
தரலாட்டி தின்னுட்டேன். அதான் நானும் சொல்றேன்.
he paid a gross contribution அப்படியே வர question.
Cross வந்து cross தான் வரும். பேர் எடுத்தா இதுவும் சலுகை. total income.
One,
7 money.
then you can get a person.
Can.
How? The limit is 120, 140.
120.
125. That's it.
217 money.
40 780 140 made.
இல்ல 125 140 தர limit.
In the 121.
இல்ல actually not mistake. Actually I was getting that personal allowance, but I was now 120 140 ல படிச்சேன். I was getting it.
அப்ப எனக்கு மட்டும்
Coming on the ways.
On the way. Coming from where?
The ways is already.
So many.
That will be.
Yeah.
Wait, don't it.
No, I don't get the answer. Can you show me the answer? I need 40,000.
After that.
40.
Okay. Sorry. I thought. That's it. Done. That's very good.
Yeah, done.
So it's a
5 minutes.
Car benefit and
Ah.
fuel benefit both are your-
Layout.
Boys, done. Abdullah. Done. John.
Answer is waiting.
Done. Abdullah done. Ishaq done. Shan done.
Previously it was 2.25.
Now it's 2.25. No, 2. Sorry, 2.
Previously,
Sometimes back 2.25. That is long time back.
so the 2.25 only comes in when it's for living accommodation as well.
And beneficial rate loan.
Okay.
Beneficial rate loan. You borrow from your employer. Official rate of interest. Okay. Shall we start?
For the answer.
Wow. Wait, I have to find the answer first. What's the name of the company?
Roll context of the question.
John.
This one.
Sir, 100 is difference.
That's fine, 100. We'll see what happened to the 100. Okay, shall we start? You need to calculate the income tax liability. No? So let's start one by one. Following information relating to his employment has been given. So George is paid a director's remuneration of £9,000 per month. Okay. So salary, what do you guys do? Wait, I'm still in the first one. So salary, all agree, 9,000 into 12. That is 108,000. Right. Next one, during the year, George paid 150 a month to selected charities under an approved payrolling giving scheme. So what will happen for that? Well, is it?
For charities. Charities can be
Okay. Donations, what did we do? Yes. We had 3 kinds of donations. Gifted, payrolling, trading. Gifted, we had the 20% upfront benefit and tax rate band extension. Payrolling, we deducted from the employment income. Trading, we deducted from the trading income. Agree? Deduct from trading income. If it is a trading charity, yes. Trading donation, yes.
The other one is
Payrolling. Payrolling is direct from the payroll salary. Trading direct from the trading income. Employment income. Yeah.
trading, yeah.
The source of income is different. Gifted. Yes, 20% upfront benefit and tax rate band extension. Gifted. So this one is a payrolling one. So 150 per month means what should we do? Right. So that's what they have done. 150 into 12 is 1,800. They have deducted from the employment income. Agree? You're good?
So, but. It will.
They are saying per month, right? Yeah, they are saying per month. That's why I always say read properly. From 6 April 2023 until 31st December 2023, that means around 9 months. Correct? George used his private car for business purposes. During this period, he drove 15,000 miles in the performance of his duties for Quick PLC, for which the company paid him an allowance of 40 pence per mile. Sorry? Yeah, no need to apportion.
There is a.
Yeah. So what we need to do?
First 10,000.
45. Balance 5,000 in 25 compared against 15,000 into 40. Correct? Then the gap would be how much?
250.
250. That you need to do what? Add it as a employment income. Clear?
Yes.
All okay?
Yes.
Right. How many minutes should we take for this question ideally? 15 marks has been given. So 15 marks into 1.8 would be the time that you can spend. No, we are going by the miles here. Yes. We're good? Right. Next one. From 1st January from 1st January to 5th April 2024, Quick PLC provided George with a diesel company car with a list price of £43,000. The car was purchased by the company at a discounted price of £38,000. George contributed 6,800 to its purchase. It has an official CO2 emission rate of 162 grams per kilometer. The car does not meet the RDE2 standard. Quick PLC also paid all running costs for the car, including fuel for private journeys. Right. So what should we do now?
Fine. Minus the employee.
6,008.
Is it?
Yes. 43 minus 6,800.
Really?
Yeah, yeah.
Sure?
Yes.
Sure?
Yes.
100%?
Yes.
Okay, you take this chair, you take that chair, Shan pick something and hammer your head. We had a limit. 5,000 max can be deducted.
5,000 can be deducted.
We had a maximum cap.
5,000 deducted.
We had a maximum cap, right?
I understand.
Only 5,000 can be deducted for employee contribution towards the capital. Correct?
So if I put 5,000,
Probably. You go for the list price, the original price by the manufacturer. Sorry? Anything else, the cost. For car benefit, we go for the original list price by the manufacturer. Yeah. Are you okay? Yes, 5,000 max deduction. Altaf also says that. Okay, then £1 is fine. Okay, guys, let's quickly finish off. We have one more question to do as well. So car benefit, what are we going to do then? We took the list price 43,000 minus 5,000. So the price would be 38. Then we need to calculate the rate. Exactly. So it is what do you call 16? You can start from 20 basically. Start from 20 because it doesn't meet the standard. Start from 20. Then this covers only up to 55. So 160 is the mileage, the CO2 emission. 160 minus 55 divided by 5. It comes to 4, basically 41. But you are capped at 37. That is the list appropriate rate. So for car benefit, 38,000 into 37%. But this is only for 3 months, right? From Jan to April. So we need to divide it by 12 and multiply by 3. That is 3,515. Agree? But that is not all. They are saying the company is providing fuel and other stuff as well. So the fuel benefit also we need to add. For that, base amount multiplied by appropriate rate. Base amount is 27,800 that is given in your tax rate tables. So take that, multiply by 37. Still, this is the calculation. Yes. Correct. Are we okay? That also you need to time a portion divided by 12 into 3. We are all good? Right. Which amount? 2572. Yeah. Just after the car benefit. We okay? Shift. Right. Can I move on to the next part then? Shan, all okay?
Yeah.
Sure?
Yes.
Okay, we were in adjustment 4.5. George was unable to drive his car for 2 weeks during February 2024 because of an accident. So Quick PLC provided him with a, what is that? Chauffeur means? Ah, okay, chauffeur. Okay. So whatever that fellow, at a total cost of £2,000. So what should we do for that? And it is a taxable benefit, right? So 2,000 you can take. They have taken. Next one. In 2021, George was provided with a laptop computer costing 2,500 preliminary for the business use. This machine was replaced on 1st Jan 2024 with a new equipment costing 2,000. George purchased the first computer from the company on 31st December 2023 for £60 when the market value was 250. So what should we do now? 0. Okay.
You raise 50 minus 60.
Okay. He's becoming smarter.
That is okay. But still I had a doubt.
Yes, that is the doubt. Then you have to do the lengthy calculation.
What time is
I mean, if so, there will not be this much of adjustments. You know the calculation. You know the answer for that. You know how to calculate, just that you are not confident about that. You know the calculation. I'll come to that. Finish off this one. So laptop, they have given a clear working. First one, initial one, it is for business purpose, so no tax. But something valuable of 250, he is getting for 60. So the gap is a taxable one for him. Correct? So that 190 we took. We are okay? Right. Anything else we need to do for that? That is it, right? So it's done. Then for your one, if it is used for private usage, then that whole 20% benefit calculation needs to be done. 2000, yes,
Combined into 20%.
for the number of period. Then take the gap, and he's purchasing that. No,
They are replacing it with another laptop for 2000.
they are replacing, but the original one he's purchasing. No,
So he's purchasing the computer.
wait. Let me read again. George bought the laptop. New equipment. George purchased the
Is it the same?
first computer. That's what they're saying. He's purchasing the first computer. The previous one he's purchasing from the company. Shape, no? We are all good up to now? Right, can I move forward then? Right. Okay. We have only 2 more adjustments. Quick PLC has provided George with living accommodation since 1st January 2020. The property was purchased in 2012 for 100,000 and was valued at 230,000 on the 1st January 2020. It has a gross rateable value of 10,150. So what should we do? We start with 230 because it's more than 7 years gap. That is the annual value. Yeah. So what am I going to do? Simple living accommodation calculation. How do we calculate that? Yes, correct. Annual value, we took the rateable value 10,150. Then additional benefit, we took 230 minus 75,000 into 2.25. So the total comes to 10,150 and 3,488. We are good? Right. Isha, call okay? No, it's given throughout the period, no? Last adjustment, right? George was a member of Quick PLC's occupational pension scheme into which he paid 6%, so that he can deduct. Yeah, correct. Quick PLC paid 12%, that is a exempted benefit. Yes. So his payment we deducted, correct? Employers one, better they haven't done, but better to give a line and give a 0 value. They have given where? Ah, right, they have given 0, right? Then okay, no problem. So now we are okay. Now balance. When you balance, the total comes to 121,885. So that means you're falling in the middle bucket for personal allowance calculation. So you need to calculate the reduced personal allowance or adjusted personal allowance. The gap is 21,885. 50% of that minus from 12,570. So it becomes 1,627. Then your taxable income becomes 120,258. Agree?
Yes.
That means 37,700 into 20% and the gap into 40%. So the final answer will become 40,563. Agree? That's all. Ishak, you were saying something. Manageable. That's it. That's it. Okay. Sorry. Right. Okay, guys. I got 2 questions, right? One is private benefit of laptop. If there was a private benefit, in this one we don't, because they clearly say it's for the business purpose. If there was any private benefit, we already know how to calculate. We did in section A. Take the value, multiply by 20%, multiply by the period. then deduct it from the cost at that time, compare against the market value, higher of that will be the benefit. From that, he has paid 60, that could have been deducted. Then why the basic net back isn't extended? The reason is we do not have a personal pension contribution here. We have only an occupational pension scheme contribution.
So the payroll, the payroll, that cannot be applicable to example.
No, personal pension contribution will also extend. Yes, definitely. Are we okay with this question? All okay? Right. Basil, Altaf, are we good? Right. Then shall we move on to the next question? Okay, 11 marks. So you have 15 marks more to do overall. Third question. Yeah, one 10-mark question, two 15-mark questions. No, this was the form. 12. Should be whole. Yeah,
Section B, 3 questions. Section C is 3.
Because.
for tax? When? I'm talking about tax. Sorry? 9. This is easy. I told that was the first question. Yeah,
The same again, they are asking.
but
Just the training profit.
yeah, calculate. Okay, if it comes in the exam, what are you going to do? Are you going to write? This was asked earlier also. No, no. Obviously, then quickly do the calculation.
I thought probably.
Be upper than this, so I told you at the beginning.
Confidence. Oh, I'm telling the truth. This is easy compared to exam paper. This is damn easy compared to exam paper, so don't expect exam to be easy like this. But
I can see. How well would you do? Ahora tengo que.
But trading
Your question is less than 55, you can allow to pull out. More than 55, you have to right? he will give to customers books and books on our competitive yeah staff is like 50 years or equal to 50 years, renew பண்ணிடு. If it comes more than 50 years, you can't. 50 years equal to it should be less than or equal to 50 years. Plus, அதோட இன்னும் 90 years. 2000 அளவுகள். Switch அளவுகள், okay. Direct பண்ணது சும்மா
எடுக்கணும் 25 எடுக்கணும் 2 எடுக்கணும்
இது வந்து பண்ணணும். ஒரு டிடக்ஷன் premium தானே அது வந்து ஓனருக்கு போற டைம்
this premium payment பண்ணா
பேமெண்ட் பண்ணா தான் ஒரு பிரீமியம் கிடைக்கும் அது இல்ல டிவைஸ் பெயிண்டிங் அது டிவைஸ் அது senior people. Yeah, the main code is 80%. Okay, okay. Except from the capital allowance direct account 18,000. You're putting in the main code and show it is getting deducted. Disposal தானே disposal
zero செஞ்சு போடுறது
இல்ல ஆனா இப்போ இங்க இப்ப சொன்னதால disposal of machinery for 18,000 percent that you are deducting but I don't know from the main code yeah 130% of like this yeah
18% and make to deliver you don't see it.
Correct? Come on, guys, we can do. Ishak. Bill. Bill do.
Shan itself is
I mean even what is the short month it's a
What?
I'll be like Zuma okay
What? You lost it.
This question they are talking about the disposal of machineries. The 130 super deduction was claimed. Okay, so 100 disposal of machinery. This was the proceed or the cost.
That has to be the disposal proceeds, right? Because they have
Proceeds.
often the date first August 2011.
So deduction was already claimed, so this amount we should put it to the capital loss.
Yeah.
Okay, that's
This is confusing.
so this FIA was being yes, okay, that's but then
So special rule, then we have to add 7,000.
I don't know that. Where is that? Sorry, I forgot.
In very silent side.
I am glad that removal is working now. Committed and working. I'm so scared. Yeah, what? Don't be scared, you can do. I have to think you can do. Second thing, D is like pro, other than. Okay, so
Nice.
G, da, E, all are there. D, D is the first step, D, da, is
check my no,
Okay, so your computation should commence from the net profit figure 130,140 and should list all the items referred in notes 1 to 5, indicating by use of 0. you should assume that the company claims the maximum capital allowances available. This part of the question does not require to consider 7 and 8 points. Let's find the answer first. What was the name of the company?
Retreat.
Retreat. But this is part B, whereas part A. This is the beginning. Okay, let me, or else let's log in. So I'll do from the portal itself. No, from the answer in the portal because the PDF is not there. No? I don't know. I emailed everything, but that part is not there in the one that they have downloaded. Anyone can access. Anyone who has a registration.
Yeah, can access after doing the exam.
No, before the exam you can access. Yeah. I'll show you. I'll show you. What? Okay. Yeah. Yep.
49705.
Okay. Let's see. Let's try to take this out. Anyone knows a way to take this to a separate window? No? Trying, but it's not coming. Sorry? Can't we? No, downloading option is not there. That's the problem. Okay, we'll do from here. Right. So we are starting with what? 130,142. Agree. Then let's see what are the notes we have. Depreciation, you can straight away add. Nothing to worry, no. Correct. Then leasing cost. Let's see what are they saying. The leasing costs are respect of a car with CO2 emission of 78 grams per kilometer. So that means it is a high emission car. So 15% needs to add back. Agree? Right, let's see what they have done. Okay, they have done the same thing. Yep. So what you have done, depreciation added back. Lease 15% into 6,300 added back. And this thing is hard to take me. There is no what? Sorry? Tab what? No, not that is not there. No. Okay, are we okay? Shall I move on to the next one? What are you looking? I didn't understand what is Shan watching. I know this one is not visible. Then what are you looking for? Okay. Next one, entertainment expenses. You can airdrop. You are trying to airdrop from the tab. I don't think so.
Can I take a photo?
Yeah. I don't know how to do. You know how to do?
Show me.
But this is the tab.
No,
Wait, it has another part.
yeah, on the airdrops.
I'm blank about that. You have to tell me what to do. Okay, I show some photos.
So, yo. I'm going now, sir. Huh? ఏం బ్లూటూత్ తేవయా లే
Okay.
3,000 and taxable. 3,000 and this 2,500 take
అట్ అట్లాంటిస్
Can I give a try from the mail?
సో ఐ థింక్ ఇట్ కేమ్ then like to share photo accept from where accept பண்றது இதுல காட்டுது
You know, it's-
accept yeah save to downloads
The thing is, then it is not getting saved in the tab.
sent
Open the tab and see. Oh, open the
No, it's not coming from the tab.
it has to come to this
No, it's here to this one, not to the tab. Let's see. Let's
Then-
see how we will.
then okay so there is an option called iPad
Okay,
Atlantis iPad
let's
Yes.
come here.
என்னடா ஒன்றுமே வருவதில்லை everything is going there
Let's check whether it's in the email. Technically, when I click it, you do, but
or shall I send email
so let me check from here if it is there.
so typing
This is retreat B, that is there. Premier partners 1, 2, 3. Tell me, the other one. Wait, it should be there something.
எங்கடா இது
No, wait. Let's check from the email whether it is there in the email. It is there in the email, no problem.
this one shall I send to this
Fine.
can you show them
Let's see whether this is there.
நீங்க வா
This is John.
இங்க வா சிராகி வந்து பாருடா வைக்கப்படாது. Sir, can you show the wait, wait, wait. Premium partners
1234 at
1 2 3
gmail.com.
4 gmail. அடே நானும் இதுல வருவேனேடா கேமரால அத மறந்துட்டு நானும்.
You realize that now only? Okay, shall I? You sent it?
Yeah, check me.
Give me 1 second.
PPI me. This is your mail.
No, this is their one. I'm just checking whether it is the. This is one, no?
Yeah, this one.
Okay, right, we can do. Okay, it is there. They have missed to open that it's there. Let's try. Already what? Yes, Dul, what's the issue? Dul? Not Abdul, just Dul. What?
No, sir. It's for me.
Yeah. I used to call Shan. Okay, let's start. Now it's visible, no? Shape. Okay, now we can see it. Right. So up to leasing cost we did. We are okay with that? Right. Can I move on to the entertainment then? Okay, for entertainment, they are having entertainment of customers during a client appreciation week. Can we deduct?
Appreciation week.
Cannot be deducted. It should be added back.
Yes, we need to add it back. Second one, staff Christmas party.
0. Allowable.
Okay, great. Gift to customer, books and pens with retreat limited logo given to 125 customers, £5,000.
5,000 divided by.
Great. Up to 50 you can allow.
So, I don't know. If they say for in return for advertising,
Still, we have the limit. £50 would be the limit.
so that is negative.
Advertisement should be there. If not, you cannot anyway claim. So here they are having the logo, means they are having the advertisement part. Correct? Because of the emission. Less than full amount can we get? We are okay? Guys, I also want to finish quickly. So help me out to finish quickly.
Ask question. Someone staying online.
Not yet.
No, there's no online people are there still.
Yes, they are there.
Oh,
All of them are there. Okay. Now focus back to the question. So Christmas party, we are not doing any adjustment. If to customers also, we are not doing any adjustment because it is below the limit. Great. Then next one is donation. Okay, entire amount add it back. Usually deducted from trading income, no total profits. Total. Yeah. Okay. Right. So donations add back. Okay.
After this, after trading, from trading profit only, you will deduct.
From the total profits, you can deduct. Okay.
Then this one we are calculating to arrive at trading profit, which is later taxable.
Yes.
That is-
So they're asking for the trading profit or loss? No, not for the tax, right? Yeah. Let's see.
that taxable.
Then other expenses including a legal fees relating to purchase of a 10-year Lease of a building, what should we do? You guys tell me. Second one, renewal. Either way, it's 50 years. So new one, we can allow. Renewal, we don't allow. Agree? Then capital. Yes. So the ground rule is short-term lease. Short-term lease means 50 years, less than 50. Correct? Ground rule is 50 years. That's the short-term lease limit. So if it is a new short-term lease, we allow the legal expense. So we disallow the legal expense. If it is a renewal of an existing short-term lease, we allow that. Correct? So the new lease that they are going to, we add it. We don't allow that to be deducted. That is taxable. The renewal of a short-term lease, we consider it as a revenue component. We allow you to deduct that. Clear? We're good?
Last time figure.
So then there is no years in this consideration.
No, years we are considering to identify whether it's a short-term lease or not.
So if it's a long-term lease, what's the?
Then it's a capital component. We
Then
can't
you
allow
can
to
deduct.
deduct. Yes, then we can. We can't allow you to deduct. So it's a disallowable expense.
But this is short.
Yeah, one is 10 years, the other one is 20 years, right?
Both short.
Both are short.
So the difference of taking one and leaving other is because of
Capital.
renewal and purchase.
Yes, renewal we allow, purchase we don't allow.
Capital should be added back. Revenue, this one should be.
Yes, renewal we consider as a revenue component. New lease we consider it as a capital component. Yeah, okay? Clear? Shan? So guys, focus. No. If it is less than 50 years, we consider it as a short-term lease. If it is a short-term lease, renewal we allow. Yes. If it is a new short-term lease, we disallow. So first one is a new one. So we disallow that, we add it back. Second one is a renewal. So we allow that. So we don't do any adjustment. We okay? Clear? Right. Then the next one. Premium paid. Retreat Limited acquired a leasehold office on 1st April 2023 and paid a premium of 30,000 for a 10-year lease. Premium has not been accounted for. Then what should you do? How are you going to do it?
30,000 into 2% into 9. That answer be minus 8. That value divided by 10.
Great.
The one which is falling on the person who paid the premium.
Good. So simply what you are going to do, like you said, 30,000 minus 30,000 into 2% into 9. Final figure we divide by 10. What is the answer then? 2460. So they have deducted that. We are okay with that? No questions? Isha? Yes. You okay? Right. Then, wow, plant and machinery, they have a lot. Tax rate. Any questions? Right. Tax written down value on the main pool at 1st April 2023 was 20,000. The special rate pool 13,000. So opening balances you can just put into the pool. Correct? Then on 1st June 2023 purchase of a second-hand equipment. What should you do? Purchase of a second-hand equipment. What should you do? This 30,000. Main pool, but you can go for AIA. 1st August 2023, disposal of machinery for which 130% super deduction has been claimed. Great, 18,000 can be taken to the capital allowance column. Good. 1st December, disposal of an integral feature. 50% FYA has been claimed on the full cost. That means AIA has not been deducted against this one. Agree? So what should you do then?
50% in special rate code, 50% in capital.
Great. All disposals were sold, proceeds were less than the cost. Okay, no problem, no then. Let's see.
Loss is exam.
We don't consider gain or loss. No. That is only if you keep the asset in a separate line. If you have pooled, what we discussed was proceeds or cost lesser one deduct from the pool, right? Correct. That's what we did. Cost compared against the sales proceeds, we over, we straight away deducted from the pool because individual asset wise, we don't know the capital allowances we have deducted, right? We take cost and disposal proceeds, compare those two.
Is cost.
Whatever lower, we deduct from the pool. That is a generic treatment for a disposal. No? Correct? Now here, first one is a,
So it's not the gain or loss.
guys.
Not the gain or loss.
No, we are not calculating gain or loss in tax.
The gain or loss will be taken.
No. We never did that. That is only if you are keeping the asset separate. In the pools, we never calculated that. No. In the pool, balancing allowance came only when your pool becomes negative, not because of one particular asset. Remember? Okay. Accounting principles, forget. Asset-wise, we are not calculating gain or loss for trading income purposes under taxation unless the asset is kept separately. So there are some assets we keep separate.
Asset will be kept separate, then the gain or loss from that will
Yes.
be taken for the.
Correct.
Or else, the total.
Cost or proceeds, whichever lower, deduct from the pool. Clear? So we are keeping assets separately in few conditions. One, private use. Two, short life assets. Depooling. Correct?
So I just capital.
Okay. Let's see. So machine, entire 18,000 be deducted from the allowance column itself. The special rate pool one, 7,000 deducted from the allowance column. Balance 7,000 deducted from the special rate pool itself. Agree? Then balance the pool for main pool 18% WDA, special rate pool 6% WDA. So altogether, your capital allowance value comes to 8,960. Are we good? You or bad? Sure. Sure. Deal?
Yeah, that's a.
Right. So then capital allowances part is also done. Dividends received. Sorry. Yeah, 7 and 8 is not necessary. Yeah, then that is all right. The morning rot and explain. Sorry. The adjustment is what we just did now. Yes. Right, okay. I got a question online. So is it 2% or 2.25% for the lease? Lease, it's 2%. 2.25 is only for official rate. So official rate is used against living accommodation benefit and beneficial rate loans. We're good? Right. Yeah, this one is then done. Final answer would be 145,000. Guys. Final answer would be 145,625. We are okay with this one? Right. We have one more question in this one. Okay. Mr. Fadil, okay with that? Wow, finally. I have to also go home and eat something for me. Okay, you simply need to calculate the TTP.
Yeah.
Okay.
145 they were given indexation allowance was there. And dividends. Yes. No, dividends.
Dividends is also there. So
Okay.
in DIM.
This is a company, right? This is a company. Yeah. Sky. You don't need the profit. You calculated? Yeah. Hmm? Hmm? Yeah, this is unconnected. Let's calculate them. So what was the profit figure you got?
4.625.
Okay, this is what
4.625.
wait. Your TTP is what? TTP? Actually, not TTP, sorry.
Just
Yeah, it is. Your trading profit 12145.
625.
Right. Then what you need to do?
625.
625. Okay.
145.
Okay. From this you need to deduct.
You see.
How much was that? Political.
3750.
Total do you have? Okay, only QCD 3750. Without the political party part.
Yeah.
Okay, 3750. 3750, no?
Yeah.
What is the answer then? The gap between these two? 875. So this one can I call as TTP?
No, there's an unconnected.
That's why no TTP doesn't affect that. No, dividend is anyway exempted. Yeah, okay. So this is your TTP. Correct. From this, you need to derive your augmented profit as well. For that, unconnected dividend you need to add. 75171. Connected dividend. So this would be your augmented profit. Agree? Correct? Agree?
In this,
So confused, but yeah. Yes. Now you need to adjust the upper limit. Because you have one subsidiary, right? So 250 is your upper limit. Divide by 2 means it will be 125, right? This is going to be your upper limit. Yes. So this set, no, not this. This one at 25 would be your calculation. Are we okay? Clear?
so there's an indexation factor coming into this one. Chart.
Indexation.
Yeah, in the question.
We have a chargeable gain.
Yeah.
Where?
Yeah. Last part of the question after the
Not
dividend.
eight, not eight.
Okay, then this entire thing changes.
Can you please use?
Okay. So we'll start from TP then. Trading profit is how much? 625. Okay, so let's see. It's not. Okay. Last one, no?
Post 3% of shareholding in.
There's a gain. 8,000 minus 110, 680, there is a gain.
Taxation.
Cost 80,000 into 324 into 0.401 into cost.
Patience.
You also.
Let me read. Okay, it's 3%, then it's not coming for BADR. Okay, right.
DDR need 5%.
Yeah.
Yeah.
Personal trading company story. Okay, so 110, 680. So 110, 680 minus the cost. How much is the cost?
8,000.
110 minus 80,000 is 30,000.
8,000 how much?
8,324.
How much is the gap?
30,356.
Then this into the indexation factor is how much? Yes.
0.40.
4,
401
0, 1. Okay. How much is the indexation then?
is 32,210.
32,210. Okay, then your chargeable gain is going to be 0. Okay, then the top one is not changing. If your chargeable gain is 0,
Yeah.
if it is 0, it doesn't impact, right? Then I think you have to add it to here as chargeable gain. Then your TTP will go up by 2,000. Then the rest would be the same. Amounts will change.
So the answer. Can you show the answer?
Answer again, I have to go and download and show you. If I sorry.
Yeah, you had.
I think it is this one, but now it is not appearing. Yeah, now I don't know. You have to check that.
So, for myself.
Okay, are we okay? Okay, actually, you don't need to go for the profit, I mean, income tax, corporation tax, they're only asking for TTP. Okay, guys, since this is the last class, so good luck for everyone. And you have one more day to torture me. So if you have anything, just get in touch with me.
All right.
And bear with me, give some time for me to breathe as well. So yeah, so good luck to everyone. Let's catch up on after results. Please keep me informed what happens. And after you sit for the exam, just let me know what happened on the exam as well. Okay?
Yes, sure.
Dropping group.
All me, not the group.
Very class. Give him more time, sir. He must have been watching.